buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean, but also
will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future, In coastal areas it's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life.
Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio in New York City and streaming on YouTube. It is Thursday, December 10th, 2020. Carol Masser along with Tim Stenovic, host of Bloomberg Quick Take, and the IPO rush, it continues.
It does. Just moments ago, we learned that Airbnb has opened for trading at $146 a share. Carol, the IPO price was $68. Talk about a pop.
What about a pop? And 2 days of pops, right? We saw it with DoorDash. We're now seeing it with Airbnb.
It's
and
wild.
do wonder whether it'll live up to these expectations. And that's the question.
That's going to be the hard part.
All right, we're going to track that. We're going to track so much going on this Thursday. First up, though, let's get a check on that trading day. Here is Charlie.
All right, thank you very much. And certainly worth repeating the Airbnb number up now by 119%. First day out, up $81 now, $149.50, as you both mentioned, going out at $68. That was the IPO price. But a day after DoorDash, we're looking at DoorDash down now by 6.9%. Do want to bring you a headline from the Bloomberg Professional Service. Gary Cohn has resolved that Goldman pay demand over 1MDB by giving the money to charity. Stocks wavering, the S&P swinging between gains and losses, lower now, down 5 at 36.67, a drop there of about 0.2%. The Dow below 30,000, down 88 points, down 0.3%. 29,973. We've got NASDAQ up 48, higher by 0.4%. 10 years up 5/32, 10-year yield 0.91%. The price price of gold, spot gold lower now by 0.3%, down $6 the ounce at $18.33, and West Texas Intermediate crude surging 3.4%, $47.07. Brent, the global benchmark at $50.47, back above $50, up by 3.3%. Recapping, Airbnb surging first day out, up 119% right now. I'm Charlie Pellet. That is the Bloomberg Business Flash.
That is remarkable.
Worth repeating, as Charlie said.
It is worth repeating, and I'm curious. We'll see how it closed. I mean, DoorDash held on to most of its gains yesterday, but we'll see what happens.
It's mind-blowing, Carol, because we're seeing sort of a tale of really two economies playing out, right?
We were talking about this, and David Weston was bringing it up as well. I mean, at some point, we need to look at our society. It's great that we create these millionaires, billionaires, and they start up companies that create wealth in general, but not when we necessarily have a large group of our society that are barely getting by, and right now really, really struggling.
And they're still waiting for Congress for some sort of stimulus.
Right, exactly. And we did get some economic data points that actually speak to that, including those weekly jobless claims. Let's get to the Business Week agenda. Mike McKee, international economics and policy correspondent at Bloomberg News, on the phone in New York City, along with Dave Wilson, stocks editor at Bloomberg News, on the remote access from New Jersey. Mike, kick it off. Those jobless claims remind us that it's really tough out there for a lot of Americans.
Yeah, we knew this was coming. We've seen a big spike in COVID cases, and governors around the country are shutting things down, and a lot of people now don't have jobs to go to. So we saw a rise to 853,000 jobless claims, almost 100,000, well, a little more than 100,000 more than last week. So it really comes back to you that we're still trying to get through this.
So, Mike, how do you square that with the enthusiasm that we see for IPOs right now? It's pretty confounding, right?
Well, it's the tale of two countries, as you were saying. It's the K-shaped recovery. We have an investor class who's largely been able to keep working and largely been able to keep their paychecks, and those people are doing fine, and they can, take part in the IPO frenzy. And then the people who don't have any money and who are just barely getting by are the ones that have been hurt the most. And that's why it is really important for Washington to come up with some kind of aid to keep people going until the promise of the vaccine gets to them.
Yeah, exactly. So, Dave, come on in on this. We do need to talk about the equity markets and what we're seeing and what's playing out. I know you're keeping a watch on that IPO market as well and Airbnb. I mean, we've talked with you about the tech bubble. A lot of people are wondering, is this just another bubble that we're seeing? And I guess time will tell on that. But what stands out for you today?
Well, I mean, beyond what's going on with Airbnb, I want to come right back to the other IPO from yesterday that I talked about, C3.ai, the artificial intelligence company.
It's got to be pretty angry. It's got to be Tom Siegel's got to be like, hey, what about my IPO?
His shares are up almost 30% today. And that's on top of 120% gain yesterday.
So he's not complaining.
DoorDash may be backing off, but it's not the whole story.
I don't need the media attention. I got the pop,
fine.
basically.
Yeah, absolutely. And beyond that, I mean, you look at the broader market, not a whole lot of direction. I mean, energy stocks are notable for their gains. Also Starbucks, which increased some multi-year targets late yesterday and talked to investors about them, and certainly that went over well. But beyond that, I mean, you look at the 11 main industry groups in the S&P 500, energy and tech are the only ones that are higher, and technology is only up 0.2% at the moment. So, it's like you've got this frenzy into these newly public companies, and everything else just kind of stalled out for the moment. Maybe not a surprise given the magnitude of the gains we've seen over the last 9 months and the records that we've seen in the likes of the S&P 500 along the way. But, broadly, not a whole lot of direction.
Right. Hey, Mike, come on back in. You watch the international economy. You saw today the European Central Bank establishing its campaign really to shield the Eurozone from a possible double-dip recession. They've got another burst of monetary stimulus. I have to think that the U.S. Central Bank is watching very closely. We've got another meeting next week. But, this is where certain economies might be on better footing come 2021, correct? If they've got more stimulus that's being kicked into their economies.
Well, to a certain extent. The problem you have at this point is that so much has been done. There isn't much extra bang for the buck or for the euro, depending on where you are, in these central banks acting. And we've seen them all call for more fiscal help. It's a little easier in the United States because we have one country and 50 states instead of 27 different countries.
Yeah.
And so there's no direct fiscal help in Europe in the same way that we see it here. So it's understandable that the European Central Bank wants to do more, but that doesn't mean the Fed is necessarily going to feel pressured into doing more at this point because they realize that, what tell me what the 10-year is now. So it's like 92 basis points.
Yeah.
A couple lower isn't going to help a whole lot.
Yeah, 0.9195. There you go. Mike McKee, of course, rounding it up there. Hey, guys, thank you so much. Michael McKee, international economics and policy correspondent, weighing in here of Bloomberg News on the phone in New York. Dave Wilson's going to be back a little bit later on, stocks editor at Bloomberg News on the remote access. A lot going on.
Yeah, a lot going on. I can't get my mind around the Airbnb IPO, though.
Why?
Well, this is a company that, just a few months ago was essentially raising money at an $18 billion valuation, or I should say buying debt at that valuation.
Buying debt.
Yeah.
What's interesting, I thought Emily Chang, who sat down with Brian Chesky, we'll hear a little bit of that interview a little bit later on, but she, this whole idea of the pandemic hits and these guys think we're ruined. Basically, right? Because everything shuts down, certainly in the hospitality industry. And here they are with this phenomenal IPO.
It's mind-boggling, and look, it was a tough path as we've covered here. They had to lay off a significant portion of their staff and pause marketing. But when you look back on this is like a case study on how to pivot and change directions in a very short amount of time. I mean, 8 months ago, if you were thinking about this company going public this year, forget it.
Right, exactly. And I think what's interesting, we've heard this from a lot of individuals, a lot of CEOs that say, workers, consumers, they've been doing certain habits for like 9 months now, and that doesn't just get turned off. That doesn't just change. And this whole idea of tapping into Airbnb rather than going to a crowded hotel, that's likely to stay with us for some time.
Look, I heard from friends just a few days ago. They live in Chicago. They're getting an Airbnb for the entire month of January in Florida.
Right, and that's how they're going to do it.
That's how they're going to do it. Both parents work, 2-year-old.
See?
At home. That's
and it's an easier way to do it.
Yeah.
And you don't certainly want to go to a hotel.
Exactly.
All right, so we're going to cover the vaccine. We're going to talk about the stimulus package, find out where we are. We're going to hear from the United Airlines CEO, Scott Kirby. They are in a tough point as well. And we're also going to check in with the CEO of BNP Paribas and the cover story of the magazine about the childcare crisis and the implications. Let's do the Business Week Bite of the Day, one number that tells us a lot. It is 4.6%, Tim. Fewer New York City drivers passed over toll bridges this month as the pandemic worsened. Traffic on the Robert F. Kennedy Bridge linking Manhattan, Queens, and Bronx was down a combined 4.6% during the first week after the U.S. Thanksgiving holiday from a month earlier, according to MTA data. We know that, right?
We know that, and it just means less revenue for the city.
Exactly, and cities continue to struggle. All right, let's get a check on world and national news. For that, over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. An FDA advisory panel is poring over data on the Pfizer-BioNTech vaccine for the coronavirus as it considers whether it's safe to distribute. Doran Fink is the vaccine's review deputy director.
The information submitted with the request includes safety and efficacy data from a large, randomized, blinded, placebo-controlled Phase 3 trial.
Human trials show that the 2-dose regimen is 95% effective, and the vaccine appears to be equally effective across all ages, racial and ethnic minority groups, as well as among people with underlying conditions. The FDA will make a decision on emergency use authorization after today's vote from the independent panel. Well, once the FDA does finally approve a vaccine, the process of distribution starts. FedEx Executive Vice President of Global Support Richard Smith told senators today this is not the company's first vaccine rodeo.
We have years of experience in this area, shipping flu vaccines every flu season and moving vaccines globally for decades.
UPS will also be making deliveries. The vaccines will be tracked using GPS and special labels. Attorney General William Barr plans to remain in his post and will not step down early unless President Trump asks him to leave. That's according to a Justice Department official. Speculation has swirled Barr might resign this month after his latest falling out with Trump after saying the department had not found evidence of widespread voter fraud that would overturn the election. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Massar along with Tim Stanovic of Bloomberg Quick Take. And I'm assuming you guys talked a lot about virus. You did your shows at 9 and noon.
Yeah, and look, 9 and noon today. We're streaming at bloomberg.com/quick take, QT or Quick Take. You can find us anywhere. The thing is with the virus, it's this thread that sort of runs through everything right now. Whether we're talking economy, markets, vaccine, recovery, it's all about the virus.
Right. It's like you can see every question, every statement that's made. We're going to do this if we get a vaccine, if the virus goes away. I mean, that's what it's all about. And here we are, like New York, you know this, I know this, like it feels different from how it felt back in March and April. But nonetheless, New York is getting really near where we have to be a little bit worried about the number of cases. Apparently just shy of the Empire State's worst day record that was set back in April 15th. It's poised to break that mark any day. So that's kind of on the precipice of like that happening again. Not precipice, it's actually like going up.
Yeah, I mean, in terms of number of cases, it's 10,600 new cases yesterday. That's according to the data from the COVID Tracking Project. How would you describe this great graph that we see here? It's I don't want to say it's a smile, like kind of like a smiley face, but it's like, we come down from this peak over the summer.
Yeah.
And then we just start going up in the early part of the fall in October.
Is it U-shaped? Is it W-shaped?
Yeah, it's a U-shaped, exactly. It's a U-shape, and here we are. We're sort of smack dab right there where it's about to go back up to the peak.
Well, and this story, and this says it, the pandemic looks much different than it did 8 months ago, and sirens echoed through empty Manhattan streets. Our Nick Corollo writing this, the number of patients hospitalized statewide, they're rising. It's about a quarter of what it was in April when the virus overwhelmed the healthcare system. So we've heard it, right, from our medical guests, like in terms of, we've learned so much about treatment modalities. We're not necessarily seeing people put on ventilators like they were before. It's a lot different.
It is a lot different. We're not seeing the hospital capacity at this point being tested like we were back then. We know a lot more about the virus, but I also wonder if it's just like we were talking about earlier this week. We're starting to live with it in a way that's sort of we're becoming numb to it.
Yeah, well, that kind of breaks my heart too a little bit. All right, we're going to have more on the virus in just a moment. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Airbnb up 112%. First day out, 144.43 right now on Airbnb. IPO'd at $68. IPOs very much in focus. Yesterday, of course, we had the DoorDash IPO. DoorDash lower now by 7.7%. Stocks are wavering as traders assess prospects for fresh stimulus amid the most intense negotiations since Election Day. S&P off-session lows as Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi both cited progress toward a COVID-19 relief deal. Here's where we stand. The S&P is down 11 now, a drop there of 0.3%. The Dow down 125, down 0.4%. NASDAQ holding on to gains, up 34 points now, higher by 0.3%. 10-year up 430 seconds, 10-year yield 0.92%. And we've got gold, spot gold down 0.4%, 1832 the ounce. Crude keeping an eye on Brent, holding above $50 a barrel, 50.19, up 2.7%. West Texas Intermediate crude up 2.7%, 46.73 a barrel. Airbnb's CEO Brian Chesky's wealth soaring to $11.4 billion as the stock doubles in its IPO again. Airbnb up now by 115%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie. Man, every time I hear those Airbnb numbers.
$11 billion.
Like that.
Wow.
Yeah, exactly. We're going to talk about it a little bit more later on. Big day for Airbnb and certainly Brian Chesky and his team. Big day for a COVID-19 vaccine in the U.S. We've got the FDA. They've got their advisory panel gathering today. They're going to consider issues including the safety of the shot from Pfizer and BioNTech. They're looking at that messenger RNA technology. It's never been used before in human vaccines. So this is what they are digging down into big time.
It hasn't, but I think this technology, what we've learned is sort of coming at this from a new angle. Now, never thought I'd be talking about vaccine technology, right?
Yeah.
Even though it hasn't been used in humans, it has been being researched for years at this point. So they're not coming to it completely and completely blind.
Which is a really good point, right?
Yeah.
The development and the work on it has been long in coming. Let's see what our next guest has to say. Dr. Chris Beyer, he is professor of epidemiology and public health and human rights at Johns Hopkins University, Bloomberg School of Public Health. He is on the phone from Baltimore, the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Beyer, I think, am I saying it correctly? Beyer.
It's Beyer.
Beyer, forgive me. I knew when I said it wasn't correct. So what are you expecting, anticipating, hoping to hear from this FDA advisory panel and the news later on today?
Well, I think most of us in the field believe that the FDA will, first of all, that the committee will make a recommendation to the FDA for an emergency use authorization for the Pfizer candidate based on the efficacy data, which is, as your listeners probably know, over 90%, 95% actually, and on the safety profile. And that the FDA will then very likely issue an emergency use authorization in the coming days, and that we could start use of this vaccine perhaps as early next week.
Well, it can't come soon enough. I mean, Carol and I were talking about how New York City is close to where we were earlier this year. The idea of hitting a COVID record just after months of controlling cases here. When do we start to see these numbers go down, Doctor, after the vaccine is rolled out? Certainly, we've talked about the challenges in rolling out that vaccine, but when will we start to see numbers go down?
Well, I think what we're going to have at the beginning, unfortunately, is that the numbers are going to continue to rise. We're expecting that spike from the Thanksgiving holidays. We're expecting more transmission over the coming holiday season. And we're going to have a period for several months where we're going to have vaccine scarcity. Even if this vaccine is approved for emergency use, and the Moderna vaccine, which is going to have its hearing next week, even if both are approved, by the new year, we're thinking probably about 40 million doses available, and that would be enough to immunize 20 million people.
Remember, we have more than 23 million healthcare workers alone in this country. So there's going to be a period of scarcity and a period of rising rates of infection. We're thinking that probably by the first quarter of the year, the vaccines will start to be more available. There are other vaccine candidates in the pipeline that also are being evaluated: AstraZeneca, Johnson & Johnson, and 2 more trials that are going to start this month. But it's probably going to be June or July before we have enough vaccine for everyone in this country who wants it.
So I kind of feel like, Dr. Byrer, that it's really important that we set expectations for the public and U.S. citizens. So I heard someone say to me, you know what, we're not going to get back to life probably until next September, because for families who have kids, it's still going to be a difficult summer as the vaccine continues to roll out. How do you see it? What's the timeline that you think is realistic when we can all start thinking about really kind of re-entry here?
Yeah. Well, it's a very important question. First of all, you have to remember that we have not yet assessed any of these candidates in children under 12. So Pfizer did add 12 to 18-year-olds in its trial, but have only asked for approval for 16 and up. So we still have to do the studies in kids, and that's going to take some time. It's also true that we need to do those studies in pregnant women to be sure that it's safe and effective for them. I think, when we have enough vaccine available for all adults, which, as I said, we're thinking will be midsummer of 2021, we'll still have the question of how many people have been willing to get immunized and how well the immunization programs have gone. And we have one other big question, which is we don't know right now with either of these messenger RNA vaccines if they can prevent transmission. These trials are all studies of clinical outcomes. So we're very optimistic about how well they perform to prevent disease, but we don't know if they interrupt transmission. So for now, we're all still going to have to wear masks.
Doctor, very briefly to that point on kids who are 12 and under, what's the timeline for those studies, and when can we expect results from that? And we only have about 15 seconds left.
Yeah, well, we'll need to have the emergency use authorization in adults before those trials can start in children. The expectation is they'll be much smaller, about 3,000 kids, and they probably will start in the first quarter of 2021.
All right, we can expand on that, and we'll continue this conversation because we've got a few more questions for Dr. Chris Byrer. He is professor of epidemiology and public health and human rights at Johns Hopkins University Bloomberg School of Public Health. Lots of questions, and I do think we've got to kind of all set our expectations about how 2021 plays out, to be quite honest.
Setting expectations, that's key here, because we want to make sure we're not continually disappointed, right? Like, I expected to be wearing masks still right now. I haven't quite adjusted to wearing them in the summer again, though. So,
right. But get ready.
Yeah, I will.
All right, we're going to continue with this conversation in just a moment, right here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Massar along with Tim Stanovic of Bloomberg Quick Take, and we're going to continue our conversation about the virus.
It's the topic of the life. That's what it is.
It's the topic of
It
the
is.
life. It's
Would
the
you-
topic of 2020.
If
Rightfully
you
so.
could take the vaccine right now, Carol, would you do it?
I think so.
Yeah.
I want to wait for this advisory panel.
Yeah.
But that's all I was kind of, I think, waiting for.
Yeah, I was having a conversation with someone earlier today. I think I would do it.
Yeah. All right, we're going to see what the doctor has to say. Dr. Chris Beyer, we'll get back to him over at Johns Hopkins. But right now, we got to get back over to Charlie Pellet.
Well, I would take the shot too, but only if Tom Keene administers it. Here's what's going on. We have got
nice.
the Dow. We've got the S. Of course, I take it. The Dow, the S&P, they're both lower. We've got NASDAQ higher right now. Airbnb, the big market story today. Shares more than doubling in their trading debut, propelling the home rental company to a $100 billion plus valuation. One of the biggest first-day pops on record right now. Airbnb, ticker ABNB, up by 115%. Gotta mention DoorDash. It IPO'd yesterday. Shares retreating today. They're down now by 7.6%. Right to the numbers. To give you the why in a moment. The S&P down 11 now. That is a drop of 0.3%. The Dow down 128, down 0.4%. NASDAQ up 36, higher by 0.3. We've got the 10-year up 6/32. 10-year yield 0.91%. Gold down 0.3%. 18.34 the ounce. And West Texas Intermediate crude up 2.9%, 46.84 a barrel. Stocks falling as prospects for a stimulus deal remain elusive amid the most intense negotiations over a COVID-19 package since Election Day. The first COVID-19 vaccine expected to be deployed in the U.S. is under the microscope as a panel of government advisors begins considering whether to recommend the shot for emergency use authorization. An FDA advisory panel gathered today to consider issues including the safety of the shot from BioNTech and Pfizer, which uses a technology called messenger RNA that's never before been used in human vaccines. Checking some of the vaccine stocks today, BioNTech up by 5.1%, Pfizer up 0.1%, Moderna is down 1.6%, AstraZeneca, the ADRs, down by 0.4%. Deaths in the U.S. from COVID-19 surpassing $3,000 a day for the first time yesterday. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health, and he says if you're looking at this spike, you got to look back to Thanksgiving.
I've seen multiple families, myself in clinic, who were exposed, multiple households over the Thanksgiving holiday, no social distancing, no mask wearing, and we really are seeing an impact to that. The added death is based on volume, number of cases, as well as hospital capacity with limited resources for therapeutics.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, recapping equities trading mix, the Dow, the S&P lower, NASDAQ higher. We've got the S&P down 10, down 0.3%. I'm Charlie Pellet. That's Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. I want to get right back to our guest. Still with us is Dr. Chris Beyer, professor of epidemiology and public health and human rights at Johns Hopkins University Bloomberg School of Public Health. Still with us from Baltimore, of course, the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Beyer, I have like a million questions. First of all, would you take the vaccine and right now, and are there differences between what we're getting from Moderna, what we're getting from Pfizer, what we're getting from AstraZeneca? What are the differences that we need to understand?
Well, Carol, to your first question, as soon as the emergency use authorization is through, I will be very eager to get this vaccine. I think that view is shared by virtually all my colleagues in healthcare at Hopkins. The differences between the vaccines, there are some minor differences between the Pfizer candidate and the Moderna candidate, but they're basically the same messenger RNA technology. They're aimed at the same spike protein of the coronavirus, and they had remarkably similar efficacy and safety. The Moderna product, of course, will be looked at next week by the same advisory committee. The AstraZeneca trial, the candidate looks a little bit different. The efficacy, at least as far as we've seen so far, seems to be more in the 70% range. But that trial is ongoing, and we need to finish it. We need to continue to look for both the safety and the efficacy. And it is enrolling extremely well. There are 800 Americans, 700 to 800 people volunteering a day for that trial.
Wow.
Yeah.
What does this do for just vaccine technology? Because as we've read and as we've learned, the mRNA technology hasn't been used in human vaccines before, but this research has been happening for years. Does the science that's been learned throughout the last 10 months, does that set the medical community up to succeed in other areas?
It absolutely does, Tim, and it's not just vaccines. This technology could be used potentially in a number of other disease areas, including in cancer therapy. And you're right that the research has been going on for a while. If either of these products ends up going to licensure, this would be the first, or whichever one or both, would be the first licensed vaccines using messenger RNA technology.
What does that mean? What does that mean, licensed technology?
Well, so far there is no licensed vaccine based on messenger RNA. The emergency use authorization is different from full approval and licensure, right? The emergency use authorization allows us to go ahead and start immunizing in a public health emergency with only 2 months of safety data. These trials are going to go on actually for a full 2 years. We're going to learn a lot more about safety as we accrue data over time. And all of that will go into whether or not it finally is licensed and approved for use in the United States. And, you know, that is a step beyond the emergency use authorization. The critical thing about messenger RNA is that there have been some technological advances when we were working on vaccines for other diseases. And the most important one is that it turns out that messenger RNA is easily broken down by the body. And so the technology couldn't advance for a number of years until basically the development of being able to wrap these RNA particles in a fat layer. It's what's called a lipid nanoparticle. So it's a nanoparticle technology. And that allows the messenger RNA to get into our cells and for them to then manufacture the antigen and for the immune system to recognize it. So that was a breakthrough from several years ago, but it's now really reaping benefits for us. And that will have applications for many other diseases and vaccines.
That's pretty cool. Hey, well, I want to ask you, though, so the FDA panel that we're anticipating, we're going to get some news by the end of the day on the Pfizer drug, that, again, is for the emergency authorization, correct?
That's right.
Okay. And then will the FDA continue to go for the full licensed authorization or licensed and usage authorization?
Well, that would be the sponsor, Pfizer, who would be pressing for full licensure, and we have every expectation that they would. The FDA also set out in the publicly available document that they released in advance of the hearing what the requirements are for an emergency use authorization. And, you know, everybody reading that, I think, reasonably would say, yes, we definitely meet that criteria. Because, of course, we are really in a national and global public health emergency.
I just go back to the idea, here we are talking about this technology, this great technology. We're days away from it being deployed. But at the same time, we're still, 8 to 10 months away from us actually getting the vaccine. Right. And when I say us, I just, mean the collective us, right? We're all at different points in our lives, and some are further ahead in line than others. How does the U.S. pull this off?
Yeah, it's a very important question, Tim. So basically, there have been a number of frameworks put forward for allocation and for figuring out how to prioritize use of these candidates when we have scarcity. And the advisory committee to the CDC laid this out as well. But the way the administration has handled it is basically to ask each of the states to put forward their own plans. So we don't have a national allocation scheme right now. We have 50 state schemes in the District of Columbia. And so the governors and the states and the state health departments are going to have a big role to play in how these doses get allocated. Our governor in Maryland is doing a hearing today on that very issue. Everybody pretty much is in agreement that the highest priority are healthcare workers who have direct exposure to patients and who are caring for COVID patients because of their very high exposure. Then the next highest priority, or very similar, is people in long-term care facilities and the staff of those facilities.
Dr. Byrer, I want to ask you, do you anticipate anything might change in terms of the logistics and rollout come the Biden administration taking over in January? Or do you feel like the process will be well entrenched at that point?
Well, I think they're going to come in at a time where we'll have increasing availability of doses, but the operational challenges and the distribution challenges are going to be major. There's no question about that. Pfizer has to be stored and shipped at super cold temperatures, minus 80. Probably going to have to be shipped on dry ice. Moderna is a little easier to handle, but the vaccines ahead, AstraZeneca and some of the protein vaccines, some of them will be able to be stored at room temperature and will be much easier to distribute. So if we're lucky and those vaccines are also safe and effective, that will change the landscape in the first 100 days of the Biden administration.
All right, we're going to leave it on that note. You covered so much important ground for us. Thank you so much, Dr. Chris Byrer. He is professor of epidemiology, public health, and human rights at Johns Hopkins University Bloomberg School of Public Health, with us from Baltimore. And again, just a reminder, the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. What's fascinating to me, Tim, about this is that go back a month or so, 6 weeks, few weeks, like I feel like we couldn't even have these conversations.
Right.
And now it's like there's so much more information and we're starting to see the other side in terms of how we roll out.
And I think general people are going to be aware of like what mRNA is versus other types of vaccines too.
Yeah, absolutely. All right, we're going to head over to our colleagues and Caroline Hyde on Bloomberg TV. She's getting ready to talk with the United Airlines CEO, Scott Kirby.
Our audiences across the board are going to be welcoming Scott Kirby, United Airlines CEO from Dallas, Texas. Scott, welcome, because monumental announcements coming from your airline today. You want to be carbon neutral by 2050, not just stripping it back by half, but 100% of your emissions. How?
So actually what we're saying is something a little different even than carbon neutral. It's called we're calling it 100% green. And what we mean by that is getting to carbon neutrality, but not through using traditional offsets, which is what most companies are doing. And we're a little unique in that, and we hope others will follow. And the reason we're doing that is because traditional carbon offsets simply can't scale up to come close to the size of the problem across the globe. And so what we're doing, and the only way I think that we can ultimately get the true carbon neutrality for the globe, is direct air capture and sequestration. We've invested in and partnered in a direct air capture and sequestration project, the first plant of which will be the equivalent of taking enough carbon out of the atmosphere each year to be the equivalent of planting 40 million trees per year.
So Scott, I mean, just in layman's terms, can you sort of give us just a general sense of exactly what this capture does, how it works?
Sure. So what this does is what man has been doing is putting a lot of carbon into the atmosphere through burning fossil fuels and all of our other activities. And so what this does is take that carbon dioxide out of the atmosphere, bury it deep underground where it will stay in the rock formations for literally millions of years. And so it's a permanent solution. It's literally sucking the carbon out of the air and permanently storing it underground. And because of that, it's the one solution that is not only permanent, but is scalable. And we could, with the right infrastructure and expense, we could, in theory, sequester 100% of the carbon that we're producing every year back into the ground. And so it's the one solution that is viable, that can get the globe to carbon neutrality ultimately. And so we're proud to be one of the launch partners in the largest project of this kind in the world.
Scott, curious who was the big driver behind this? Board of directors, shareholders, regulators? Who was really pushing this?
Well, I don't mean to sound too egotistical, but this has been a personal passion of mine. since I was in college. And for years, I've been frustrated that there's a lot of people that want to solve climate change, that want to solve the global warming issue. But it's too easy to get attracted to the siren song of carbon offset, because then you can just write a check it off, and feel like you're done. But the reality is, man is producing 4,000 times as many man-made emissions as existed before the industrial era. And we just can't plant 4,000 times as many trees. And so the only way to solve this, the math dictates that it has to be carbon capture and sequestration. And so this has been a passion of mine. We started working on this before the coronavirus pandemic, and I'm glad that we've gotten through to the point that we can get back to focusing on the long term, thinking about the long term, and make this investment.
Kudos to you for keeping your eye on the climate change prize as we do face this global pandemic, global economic devastation as well. We're speaking here with Scott Kirby, United Airlines CEO. Scott, your perspective on COVID, the ramifications of that. I know that actually you're looking to help distribute vaccines. How much of an important part of the business is that going to be?
Well, look, I'm incredibly proud of what United is doing. We're the only airline that I know of so far that has been flying vaccine around the world, and we've been doing it for several weeks now. We've carried millions of doses. Another airplane landed earlier today with 1.2 million doses on board. So incredibly proud of what we're doing. We're able to do that because we started back in the March, April, May timeframe, reconfiguring our airplanes structurally to be able to handle the cold chain vaccines that we knew were coming. And that required a lot of changes, required support from regulators, and the FAA here in the United States has been incredibly supportive and helpful in that regard. So we're honored for the role that we're playing. But the reality is the economic benefit from us flying vaccines is a drop in the bucket compared to what is a $40 billion airline. This is more about doing the right thing for getting the vaccine distributed. And the real heroes in this are the people that work at Pfizer, Moderna, J&J, AstraZeneca, that developed the vaccines and have worked out the complicated logistics. And we're honored to play a small role in getting that out to the world. But the real answer is, the only way we're getting to a recovery is once people get vaccinated. So the big prize is at the end, whether it's United or someone else transporting it. But we've been honored to play a small role in the vaccine delivery.
Yeah, well said. And of course, it needs to be reiterated that this economic crisis we're in is effectively a health crisis, and solving that health crisis, in theory, would remedy most of the economic issues we've been dealing with, Scott. When we talk about getting people back into planes, back going on vacation and the other places that they would normally fly to, what's your general timetable? What's your general outlook for getting your capacity, your back up to something resembling normal?
So really, going all the way back to May, our view has been that it was unlikely we were going to get to a real recovery until vaccines were widely available and widely distributed. And we thought that would be towards the end of 2021. We had great news on the efficacy of the vaccines. That was phenomenally good news and unexpected to be that high at 95%. But I still think the manufacturing, distribution, the logistics is more complicated probably than most people expect. And so I still think getting to a critical mass is towards the end of next year. And so we're going to continue to be, in a world where we're probably down 50% in capacity, but revenues are down 75 to 80% in that world. So right now, what really matters is getting to the light at the end of the tunnel and getting through to the recovery. We think that's towards the end of next year. We do expect that there'll be a lot of pent-up demand. Been a lot of pull forward in retail sales of people buying durables and not being able to spend on travel, leisure, experiential things. I think there'll be a huge bow wave of demand for that once people get vaccinated. But we're still probably 9 to 15 months away.
Scott, it was not too long ago, maybe a year ago, I was speaking with your predecessor, Mr. Oscar Munoz. We were not 6 feet apart. We were not in the middle of a pandemic. And yet he was already talking about changes to enhance customer service. The customer is at the heart of what you do. We talk about changing cancellation fees or waiving fees to change flights. Are those permanent? What other changes can we expect from you on customer service?
Well, we were focused on innovating for the customer and putting the customer at the center before the pandemic. This has accelerated it by a decade, everything that we were going to do, and re-emphasized the importance. So from the beginning of the pandemic, we've taken a leading role, being the first airline to require masks on board all the way back on April the 23rd, being the airline that led by permanently eliminating domestic change fees, what we've been doing for safety, the only airline that's running our auxiliary power 100% of the time that customers are on airplanes, make sure you get the robust airflow. We've restarted all the investments in customer projects. But even more important than that has been what we're hearing from our customers. We've had over a 40-point improvement in our Net Promoter Scores as we've gone through the pandemic, which is remarkable given all the uncertainty and stress that's happening. And it's a testament to how our front line is recognizing and taking care of customers. And when we come out of this, we want our North Star to be focusing on the customer, doing the right thing for the customer. We've made structural changes. Even the climate change announcement today is about being responsive to what our customers want and where they want us to go, and being a brand they can be proud of. We won't be perfect, but we're going to do everything we can to make this an airline that is customer-centric. And we've made huge progress during the pandemic, and we're not going to let that slip by even a little bit when we come out on the other side.
All right, I think that's a good place to leave it. Of course, United pledging today to reduce that greenhouse gas impact to zero by 2050. Scott, really appreciate you taking time to be with us. That's Scott Kirby. He's the CEO of United Airlines, and we want to thank our Bloomberg Radio audience.
All right, everyone. You've been listening to an interview over on our TV side with our Bloomberg TV colleagues with United Airlines CEO Scott Kirby talking about carbon capture. One headline that caught my attention is United Air working toward a recovery near the end of 2021. We know it's going to be really a late year, next year story.
Right. He said something that I think anyone who has thought about air travel in the last 10 months has thought of themselves. Like, this isn't going to come back until the vaccine is widely distributed.
Right. And everybody, so many individuals, so many small businesses and businesses in general are struggling. I want to get right to our Anna Edgerton, Deputy Team Leader in Washington, on the phone from Washington, D.C. Anna, nice to have you here. So where are we in this process for another round of aid?
Yeah, we're about the same place we've been for the past few months.
Don't
trying
say
to
that.
figure out the last few provisions that are standing between these negotiators and a deal. They're working to try to finalize provisions on state and local aid that Democrats want, and also liability protections to protect companies from virus-related lawsuits that Republicans have been demanding.
Anna, there was this headline that crossed the terminal earlier today at Nancy Pelosi's press conference where she basically said, "I'm not allowing lawmakers to go home until a deal is reached." Not really the case, though, right?
Well, she also said we could be here till Christmas, so that doesn't necessarily mean that we're going to get it done next week. What we're looking at is the what this could be attached to, and the main piece of legislation moving before the end of the year is going to be a set of 12 appropriation bills to fund the government through the end of the fiscal year. That was going to be finished by the end of this week. They just passed legislation to push it off until next week. So we're really looking at December 18th as kind of our do or die moment that'll tell us whether or not this is getting done this year.
Is it all about this liability shield that's hanging things up?
Yeah, that's something that's been really important for Republicans. And we've had some kind of disheartening comments from people like John Cornyn, a Republican from Texas. He said, there's no discussion happening in this bipartisan group on liability protections that's going to satisfy all Republicans. So, there are a few different proposals, a few different groups that are working on this. Of course, the bipartisan group working on a $908 billion proposal, and then Treasury Secretary Steven Mnuchin that has offered a $916 billion proposal. But McConnell said, if we can't figure it out on these last two provisions, we need to just move forward with a bill that doesn't have those, but has everything else that both parties can agree on.
So what would that mean for the average American? What kind of aid would people be getting?
Yeah, there's some of the similar provisions to the package that we saw in March. It includes aid for airlines. It includes some supplemental unemployment insurance. It also has some of the kind of extending some of the provisions that was in the March Act, including rent support and different provisions to help gig workers who aren't going to have some of the traditional unemployment benefits that other kinds of workers would.
I mean, do you feel like there's any, things are getting better between the Democrats and Republicans? Anna, you see it firsthand. Any better?
We kind of see these little gangs popping up, as we like to call it. There's a gang of 8 working on immigration. There's a gang of 8 working on this this $908 billion deal. And there's always a lot of hope around these rank and file moments of cooperation, but then when it comes down to leadership, you get the same kind of political inertia, and it's really hard to get the top leaders, the Nancy Pelosi, Mitch McConnell, to agree on the details of these provisions.
Anna, really quickly, 30 seconds here. Do we need President Trump to come out and say, hey guys, let's get something done? Would that help grease the wheels, especially among the Republicans?
It could, to get Republicans on board, but he also has a way of kind of gumming up the work. So, anything that he says support, Democrats might say, no way.
2 steps forward, 1 step back. Yeah, exactly. Hey, Anna, thank you so much. We know it's really busy for you, and we really appreciate you getting up to speed, or getting us up to speed. Anna Edgerton, Congress Deputy Team Leader of Bloomberg News, on the phone from the nation's capital. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week with Tim and myself, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that is coming up next. Coming up next, our top story, we're going to talk a little bit more about Facebook, what the future is.
That story. That's a big one.
It is a big one. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Thursday, December 10th, and Airbnb shares have more than doubled in their trading debut, propelling the home rental company to a $100 billion plus valuation and one of the biggest first-day pops on record. Airbnb up now by 119%, $149.28 going public this morning. The IPO price was $68 again. Airbnb surging 119%. Stocks dropped Bonds climbed as prospects for a stimulus deal remain elusive amid the most intense negotiations over a COVID-19 package since Election Day. Stay with Bloomberg Radio for the very latest. Here's where we stand. S&P down 9 now. That is a drop of 0.3%. Dow Industrials down 100 points, lower by 0.3%. NASDAQ is up 31 for NASDAQ. That is a gain of 0.3%. 10-year up 8/32, 10-year yield 0.90%. Gold down $4 the ounce, down 0.2% at $18.35. West Texas Intermediate crude up 3.1%, $46.93 a barrel. Brent up 3.1%, $50.39. United Airlines is pledging to reduce its greenhouse gas impact to zero by 2050, a necessary step to avoid climate catastrophe, according to scientists, while walking away from a practice that is increasingly common among large global companies, and that is carbon offsets or credits generated by forest conservation or other means that can be bought in markets or privately to cancel out emissions. Scott Kirby is UAL's CEO. He was our guest right here on Bloomberg Business Week.
This has been a personal passion of mine since I was in college, and for years I've been frustrated that there's a lot of people that want to solve climate change, that want to solve the global warming issue, but it's too easy to get attracted to the siren song of carbon offset, because then you can just write a check it off, and feel like you're done.
UAL shares up 3%, American up 4.5%, Delta up 1.1%, Southwest up 2.1%. MasterCard says it will not allow its cards to be used on the website Pornhub.com after the network's review of the website uncovered unlawful content. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Here with Carol Masser along with Tim Stenovic of Bloomberg Quick Take. And I know you guys caught up on Quick Take. You've been talking a lot about Facebook, right? In the news yesterday.
Oh, yeah. I mean, the question is this like going to be the biggest regulatory action that we've seen in decades? And will it have real results for Facebook?
Yeah, and it's as much an antitrust story as it is definitely a company story. So let's get into this. And what is the future of Facebook on the heels of the news of that U.S. antitrust lawsuit that could look to break up or is seeking to break up that company? Bloomberg Tech reporter Kurt Wagner, we talked with him yesterday. We need to do some more. He's joining us on the phone in San Francisco. So Kurt, good to have you here with Tim and myself. Your story is so smart, and you really break it down in terms of why Facebook needs WhatsApp, why it needs Instagram. So talk to us about, if we're an investor in Facebook, how we need to think about how a breakup could potentially impact this company.
Yeah, well, I think the very, very short version is that both of these services really represent a huge part of Facebook's future, and a huge part, if you're a Facebook investor, of why you might invest in this company and why you would look, 3, 5, even 10 years down the road. The story that you mentioned, we brought up a couple different things. I'll highlight just a few of them. The first being revenue growth. I mean, when you look at where Facebook is getting its new revenue each year, almost all of that is coming from Instagram. And if you take Instagram out of the mix, suddenly you're looking at a social network that has really kind of capped a lot of the markets that are valuable out there and isn't growing quite as much. And the second part is commerce. Facebook has talked a lot about building shopping features into its products, kind of diversifying business that way.
I find that really interesting.
WhatsApp and Instagram are huge to that.
Yeah, Kurt, and I also wonder, too, from a technological perspective, what it would be like to actually break these companies free from Facebook. And the cynic in me says, looks at the news from a couple of years ago, Mark Zuckerberg announcing that WhatsApp and Instagram and Facebook are all going to be more interconnected on the back ends. Does that mean it's going to be more difficult if they were to get that far, regulators that is, to actually break up these companies because they're essentially all working with one another now?
I think there's no doubt. Yeah, I think the plan here is to make the messaging services from WhatsApp, Instagram, and Facebook Messenger all work together. And if this is a multi-year technical challenge to enable that, I can only imagine that the unwinding of that would be a similarly long process.
Explain what that means. Like if you use Instagram, you can send somebody a message on a different service, right?
Exactly. So right now, if you're on Instagram, you can only message people on Instagram, and same for WhatsApp and same for Messenger. Eventually, Facebook thinks that if this integration goes through, you'll be able to send messages from Instagram to a WhatsApp user, for example. And what that does is it just expands Facebook's network of messaging services tremendously, right? Because suddenly you only need one of those three services to be able to access anyone on any of them. And so it's a huge way to expand that group. But again, a lot of technical challenges going into actually enabling that behind the scenes.
I wonder too how much of this is like, antitrust and trade officials here in the U.S. government, not necessarily understanding the social space. Like I think we're all going to get an education, right, about the world of social media, or we increasingly get so, because I'm trying to understand, this is kind of a company that was thinking about its future, right, which it needs to do as a publicly held company, and think about the responsibility to shareholders to think about what does a business need to kind of grow into. So, how much of it is that Facebook was doing versus really trying to kind of own a market?
Well, I mean, this is the same discussion you're going to have around any of these antitrust cases, right? I mean, if you are a market leader, are you able to go out and continue to extend that lead? And I think that's what they did with WhatsApp and Instagram. As Facebook would argue, both of these deals basically went through FTC, not official approval, but there were no flags that were raised at the time, right? So they had a chance to review this, and they didn't stop it. And Facebook's argument is, just because things have gone really well for us since then doesn't mean you can turn back the clock.
What do you make of what Facebook says in response to this? Essentially saying, hey, we compete with Apple, Google, Twitter, Snap, Amazon, TikTok, and Microsoft. I mean, I'm reading right from their statement that they released yesterday when this lawsuit was announced. Do they really compete? Do they really have stiff competition?
Well, I think it depends on what you what you're basically talking about in terms of what is competing. Like, does Facebook compete for your user attention against dozens of things every day? I'd say the answer is absolutely yes, right? I mean, Netflix is a competitor. You could go watch videos on Facebook, or you could go to Netflix or YouTube or Amazon Prime. Messaging, certainly iMessage is a huge competitor to Facebook in the U.S. What I think Facebook does that all of those others don't is it really brings all those things into one service, and it makes it very hard for you to leave Facebook because, so many people have a big portion of their life already tied up into the Facebook or Instagram network. And so it's not so much that they don't compete, it's that none of those other things really offer the full suite of services, I think, that Facebook does really within one company.
Is there anything we can compare Facebook in terms of what it's doing to something in the past? Like, I was trying to think about, the big broadcast networks of our past, how they were limited in owned and operated stations, right? There was some concerns about having too much influence, right, in our society. Like, is there anything that's similar that this reminds you of?
Yeah, I mean, I think that's probably a somewhat good example, right, is media mergers and media conglomerates, bringing that together. Where I think Facebook kind of separates is just the global scale at which it operates, right? We have not really had a service that is used in almost every single country in the world to the scale that Facebook is used. And so while some of those other examples we've seen have, I think, been very, U.S.-centric, right. I think Facebook really provides a more global scale to this than we've seen before.
Well, and you write in your story that both WhatsApp and Instagram are really crucial to their international strategy, which is another one that if you're an investor in that company, right, Tim, that you're like, well, wait a minute, how does this impact their international growth?
Yeah, I mean, especially WhatsApp. This is something that when Facebook bought it years ago, people in the U.S. really weren't familiar with it. It's certainly grown its usage in the U.S., but still outside of the U.S., WhatsApp is so huge. Listen,
everybody should check out this story. I'll put it out on Twitter because it really does break it down. Reputation, demographics. Kurt was breaking it through e-commerce. It really helps you understand how it all kind of fits together. So a really wonderful story. Again, from Kurt Wagner, Bloomberg tech reporter, joining us on the phone in San Francisco. All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. So let's get on over to World and National News. Over to Nancy Lyons we go in D.C. Hey, Nancy.
Hey, Carol. A vaccine advisory committee is meeting all day today to determine whether to add its support to a Pfizer vaccine, the first candidate for fighting the coronavirus. Bloomberg's Irv Chapman has more from Washington.
Scientists from the Food and Drug Administration and allied health agencies are assuring the committee that people who receive the vaccine will be studied for months to be sure it's safe and effective. Dr. Nancy Messonnier described the monitoring plans.
Understand that vaccine safety and effective monitoring is a top priority for the U.S. government, and we're committed to ensuring that all these systems are in place and ready to go as soon as the vaccine program is implemented.
Dr. Messonnier said the patient studies will begin with the first American Americans to be vaccinated, health workers and nursing home residents. In Washington, Irv Chapman, Bloomberg Radio.
Republican Senator Tom Cotton says a special counsel should be appointed to investigate Hunter Biden, President-elect Joe Biden's son. Yesterday, Hunter Biden disclosed U.S. Attorney's Office in Delaware is investigating his tax affairs. He insists he handled his affairs appropriately. Well, President-elect Biden is heading down south next week. Bloomberg's Kathleen Hunter with more.
He's planning a trip to Atlanta on Tuesday to campaign for John Ossoff and Raphael Warnock, who are the two Democrats that are running in the Senate runoffs that are coming up on January 5th. Those runoffs are very important because the outcome of them will determine control of the Senate.
Polls show both Warnock and Ossoff in tight races with Republican incumbents Kelly Loeffler and David Perdue, respectively. The Republicans are far outpacing them when it comes to fundraising. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic of Bloomberg Quick Take. So if you want to find a Manhattan apartment, we've been talking about this. Now's not a bad time to do it.
No, it's not. And we're looking at an article now available on the terminal. Manhattan apartment rents sink to the lowest level in a decade. The median rental price, Carol, plummeted 22% in November from a year earlier, but it's still $2,700 a month.
Listen, we love when we do these stories because we're thinking somebody's listening to us in Iowa or Ohio, and they're saying, folks, that's really expensive.
Yeah,
that's not
like
a break.
What you 5-bedroom house you could rent for per month, right?
It's perspective. It's really expensive to be in these major cities, but like when rents go down this month, that's a good deal.
It's a great deal, and it makes me think about the next generation of New Yorkers who are in college right now or in their early and mid-20s.
I know a fair amount of people who've been coming in.
Right. This is like the time to move to New York City. And interestingly enough, you're not seeing the same decreases in price in the outer boroughs that you're seeing in Manhattan. This is really where
you live outside.
Yeah, we're in Brooklyn.
Yeah, and you're not seeing numbers go down?
We're
really?
not seeing numbers go down.
Yeah, well, that market has been crazy.
Yeah, and I think also, when we think about Manhattan, it's the people who have left to go to, like we were talking about with Airbnb, right?
Yeah.
It's people who are in their perhaps 20s and 30s who
might have some
don't
kids.
have families yet or do have
don't.
families, and are like, okay, well, I'm going to go with, if they don't have families, they're, going to live with their parents and saving money. If they do, they're going and getting Airbnbs outside of the city.
And just getting a little bit more space. Listen, and I think these are the kind of numbers that it makes sense that we're seeing some of this, and this talks about tenants seeing few reasons to sign leases in the city is costliest borough when nightlife is muted and employers are not yet requiring a return to the office. Like, let's think about where this story is going to be 6 months from now, when I do think life starts to reopen, especially maybe like middle of the summer or fall, and people start to come back.
Yeah, you'll probably be pretty grateful if you sign a lease now instead of 6 or 8 months from now.
And I know people were signing leases and it was like maybe 2 years or 18 months. Like it wasn't.
And that free Peloton bike that the landlord throws in there too, right?
But let's see what happens in 18 months whether everything goes up, because those landlords have to pay bills too.
They certainly do.
You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks drop, bonds climb amid a stimulus standoff. Shares of AT&T are Airbnb surging now, up 119%. The S&P's down 3, a drop there of 0.1%. The Dow lower by 52, down 0.2%. NASDAQ up 57, a gain of 0.5%. 10-year yield 0.91%. We have got gold down 0.2%, 18.36 the ounce. West Texas Intermediate crude up 3.1%, 46.92 a barrel. Recapping stocks mixed. S&P down 3, a drop of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. We want to get to this week's U.S. cover story. It's Remarks. It's about untangling childcare in America. It's written by Cynthia Coons. She's Bloomberg News U.S. healthcare reporter. She reports on how the U.S. child care crisis is torturing parents and the economy. She and Bloomberg Business Week editor Joel Weber joining Bloomberg Quick Take anchor Tim Stenovic and me. Joel in New York, Cynthia on the phone in New Jersey. Joel, this is increasingly an important story, and it really was made even more important by 2020.
Oh, and it's a personal one.
Yeah.
Just anybody who's a parent just knows what I'm talking about. And, you know, it's been one of the stories of the pandemic, really. And, you know, when Cynthia and the team started talking about it, you know, we started with this idea of like, really, it's been a story about moms in the pandemic. You know, that this has been, that's been the group that's been just crushed. In September, we saw the workforce numbers, and we just saw women leave the workforce right as schools were reopening and kids were staying remote, and basically families were forced with this decision of, does mom keep the job or does mom watch the kids? And that has incredible economic implications for the country. And I think, as Cynthia is gonna talk about, you know, in many ways this is just a reflection of this long-standing thing that we've known of how broken childcare is in the U.S. compared to other countries. So Cynthia, dig into this with me as you started reporting this story. You know, what did you learn?
Well, you know, it's interesting. I thought we were in a child care crisis before COVID. So what happened during COVID just really underscored all the weakness in our system. And I think the thing is also about what we describe as child care, right? I think most people think of that as 0 to 5 years old, and then after that you're in the system. But you're really not. A lot of places that are working on universal child care are also looking at summer care, after care, before care, because even our school system, when it's fully functioning, doesn't match a work day. But like Joel said, there were 865,000 women who left the workforce in September. So it was very clear at that moment in time when schools didn't reopen that this situation was just not tenable anymore. This spring, a lot of people left their jobs partly because their jobs disappeared. But I think by the fall, people were reassessing what they could feasibly do with children at home. And for a lot of women, that meant not working. And there was also a Lean In and McKinsey study over the summer. And in their study, over a quarter, I think it was a quarter of women with children under age 10 were considering either taking a leave or quitting. So this has been a really big problem for women. And I think what's most interesting is that when you look around the world at wealthy countries, even countries that aren't necessarily as wealthy as our own, there's a lot more money spent on childcare and early education. And so we took this moment to explore what's feasible from a policy perspective. What could the U.S. be doing to maybe come back with a stronger, you know, foundation for working mothers after this crisis subsides?
Well, what could we be doing? Because as you write in your story, S&P Global had a report out, and they said that the U.S. could add $1.6 trillion to GDP if women entered and stayed in the workforce at a rate similar to how it is in Norway, a country that has government-subsidized daycare. So what could the U.S. learn from Norway?
So the really interesting thing is, I think there's a perception here that investing in early education and childcare is really expensive. And sure, it is. But as a proportion of GDP, countries like Norway, when you look at the data, so we're investing about 1% of GDP. We do spend money on early education for children of low-income families. But in countries like Norway and Sweden, where they're subsidizing everyone's childcare, they're only spending about 2% of GDP. So it's not as though they're spending some extraordinary proportion of their GDP on this. And one of the interesting things and kind of best practices is making this available to everybody, but also making people pay so that it's not necessarily free for everybody. So if you're at a higher end of the income spectrum,
you are paying into the system, but you're still getting something that's equivalent to someone who can't afford to pay for that. That's a leveling factor in some of the research that's come out so far about what universal preschools do. And a lot of the programs going on in the U.S., we've seen cities like Portland just passed the universal pre-K for 3s and 4s.
But it wasn't easy, Cynthia. And there it is, kind of the, liberal bastion of America, I feel like. And yet they had a hard time.
Yeah, well, there were multiple groups pushing to get this done. They had different ideas, and they came together in the end. But there was sort of this, split decision about what they wanted to do, and they had different perspectives on it. And there were also attitudes among voters that I spoke to one volunteer who encountered voters who were saying, children should be at home with their parents. But to be fair, in the end, the vote was 64% in favor. So it was pretty substantial. And I think it speaks to something that people said to me was, we should do ballot initiatives. Bring this to the people because the people want this. And legislators may not be getting this done. But here's the thing. Those are 3s and 4s programs. Very critical for early education. Very critical component of childcare. But they're still 0 to 3. That's the most expensive. And then you still have aftercare. You still have summer. So states like Massachusetts, they're working on something potentially. They're, in early stages trying to get something proposed for this coming legislative session. But when I talked to someone who's working on it, her aim is let's get 0 to 13. Let's stop saying it's fine for parents to spend all summer cobbling together care. And like most parents know, you're lucky if you find a camp that's open from 9 to 4, and you're basically scrambling to figure out before care and after care, or your kid's school ends at 2:15, and obviously no one's job accommodates that. So let's think about childcare for the whole child and the childhood all the way up to, say, age 13. And that's, some of the thinking that's going on within the United States right now.
And, you mentioned it. It seems like it's more on a local level than a federal one. But is there any hope that, the incoming Biden administration might try and take a bigger swing at something here?
And Cynthia just got about 35 seconds.
Yep. So Biden and Harris had this on their platform. They had a $775 billion 10-year plan for universal pre-K for 3s and 4s. It'll mean a lot to have Senate on their side. I think that's going to be a big contributing factor here. But Congress got behind universal preschool back under Nixon. It was Nixon who vetoed it. So it's definitely possible to get a bipartisan coalition. So yes, with this administration, we could see change, but it's going to take a lot of ground-up work to get there.
And it sounds like we need private-public partnership. We need maybe governments giving incentives and companies stepping up and doing more plans. I mean, bottom line, right? Yeah.
Definitely. And companies, companies know they need to do that, and they're willing.
Yeah.
So that's really positive, too.
Great stuff. Great cover story. Great remarks. Thank you so much. Cynthia Coons, U.S. healthcare reporter at Bloomberg News, on the phone from New Jersey. Joe Weber, editor at Bloomberg Business Week. He's at Bloomberg headquarters, but he was catching up with us on one of our access lines here in around our studios. All right, you are listening to Bloomberg Business Week. It's important.
This article made my blood boil.
Yeah. We got to do better. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Massar along with Tim Stenovic of Bloomberg Quick Take. And you said people have been saying, hey, Tim, nice job. You got the Who song.
They've actually been saying the opposite, which is pretty much you're pathetic when it comes to Dave Wilson's song of the day. Like, it's just every day at 3:30. I know I'm just going to be embarrassed.
Get ready then. The chart of the day coming up with Dave Wilson in just a moment. First up, though, let's get back to your top stories and a look at that trading day. Hey, Charlie Pellet.
Well, hello there. We've got 28 minutes to go ahead of the closing bell. Got to begin with Airbnb. Shares more than doubled in their trading debut, propelling the home rental company to a $100 billion plus valuation. One of the biggest first-day rallies on record. Stock opened at $146, well above the $68 IPO price. Here's where we stand now. Airbnb at $149, up $81 higher today by 119%. It is a down day for the S&P 500 index. Bottom line, little change, swinging between gains and losses. Right now we have got the Dow and the S&P lower. NASDAQ is higher. Stocks dropped, bonds climbed as prospects for a stimulus deal remain elusive amid the most intense negotiations over a COVID-19 package since Election Day. S&P down 2, lower by 0.1%. The Dow is down 45, down 0.2%, and NASDAQ is up 65. That is a gain of 0.5%. 10-year up 8/30 seconds. 10-year yield 0.90%. Gold is down 0.2%, down 3.72 the ounce. Spot gold at 18.35, and West Texas Intermediate crude up 3.1%, 46.92 a barrel. Brent trading above 50. Barrel of Brent, the global benchmark at 50.39, up 3.1%. Moderna has begun an advanced stage study of its COVID-19 vaccine in teenagers in an effort to help open more classrooms safely later this year. Moderna shares, they're down now by 0.3%. Among some of the other vaccine names, Pfizer's up 0.2%, BioNTech up 5.6%, AstraZeneca, the ADR is down 0.1%. A new report published by the Centers for Disease Control and Prevention says the coronavirus was circulating in Italy as soon as the end of November 2019, lending weight to other studies that have suggested an earlier appearance of the disease in Europe. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health, and he says that finding is of interest to World Health experts who are trying to pinpoint the precise source of the virus.
I do believe we'll see a continued evolution of its origin, and the WHO is actually leading a global outbreak alert and response network team to do exactly that. They will begin in Wuhan, evaluating exactly where potential origins were at the wet markets in Wuhan, but will then begin exploring throughout Europe and other locations around the world.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Recapping, first day out for Airbnb, surging 119%. Day after, DoorDash down 4.4%. S&P lower, little change, down by 3 points, down 0.1%. I'm Charlie Pellet. Bring on the song of the day. That is a Bloomberg Business Flash.
You ask, we're going to do it. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Radio.
There we go. This is a nice one. Bruce, the boss. Thank you, Dave. You've just felt, be honest, you just felt bad for me, right?
Something like that. And the title is?
I can't do everything, okay? Let's do baby steps here.
Baby steps.
But I just know it's the boss.
Of course it is.
So let me think. I'm going to look at your chart. I'm not hearing the title of the song. What do you got for us, Dave?
Well, that's because it already came and went. It's off the new album, Letter to You, and it's called Burning Train.
Do you like the new album?
I do.
Okay.
I like the versions of his old songs as well as the new ones.
Yeah, I mean, I like his new stuff, but there's nothing like classic Bruce.
Yeah, but, Burning Train sounds pretty classic. I got to tell you.
Burning Train, isn't that like your garage band?
Could be.
Could be, right? That's a good one.
I love it.
Right?
Could be. In any case,
all right.
I mean, if you look at what's going on with initial public offerings, you could say there's kind of a burning train in the stock market, and that's why I picked that particular song.
Mm-hmm.
You know, Jonathan Krinsky, who's the chief market technician at Baycrest Partners, was looking at IPOs and also SPACs, aka special purpose acquisition companies, aka blank check companies, which have definitely been involved in taking businesses public. Okay, so you know, you put it all together. And, you know, these stocks have really taken off in the past month and a half or so. You look at, indexes that track them. There's something called the Renaissance IPO Index. There's also something called the IPOX SPAC Index. They both reached lows in late October. And as of yesterday, the IPO Index was up 32% and the SPAC Index was up 40%. You know, it just goes to show you that perhaps there's a bit of speculative excess in the market, which is really Krinsky's point in his analysis. And, look at what happened yesterday with DoorDash and C3.ai. Look what happened today with Airbnb. And you can understand where it comes from. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Yes.
Bruce? Can we talk more Bruce? I'm told Paul's telling us that Bruce is going to be on Saturday Night Live this weekend.
Paul Brennan, our producer.
Are you going to watch, Dave?
Did you know that, Dave?
Be Fallon this evening, so,
Oh, he's making the rounds. Yeah, okay.
Absolutely. He's got a new album
So if we need
out
a
there to
fix.
promote, and he's doing it as best he can without being able to go on tour with the E Street Band. So
yeah, I guess
and yes,
so.
the band will be with him on Saturday.
Yeah, Dave knew this already, I guess.
I guess so.
Yeah.
Yeah.
In fact, it's funny. I mean, I actually had a listener, Joe, point out the Saturday Night Live gig, and I had to point out to him that he was coming up on Tonight Show with Jimmy Fallon tonight. So,
Do you get like little email alerts?
you know, there are fan groups on Facebook that I follow. You know, just like I follow, people on Twitter. You know, in the context of trying to figure out what's happening in the markets, just like I pay attention to my emails. This report from Krinsky came out yesterday, and I said, it's right on the money, and given what we're seeing, with the IPOs yesterday and today now. So,
Dave Wilson, I got a question. If you were a betting man, would you bet on Bruce or would you bet on these SPACs and these IPOs? Kind of.
Oh, come on, that's not even a question. Let's put it this way. If I had a chance to buy a share of Bruce's catalog, think about Bob Dylan selling out this week, I would be a buyer.
That would be like $1 billion catalog.
Okay, so we make a deal. When Bruce goes back on tour, when concerts are a thing again, when the vaccine is here, we'll do a Bloomberg radio road trip, and go see Bruce. Maybe in Meadowlands.
Yeah.
You in, Dave?
Yeah, sounds good to me.
All right, we're in.
He's in. All right, who's buying the tickets that are going to be like probably...
Yeah, that's a good point.
$500 a pop.
Start saving them now.
Sorry.
Forking over money for tickets. So
I know you do.
Maybe it's me.
I know. That would be a bite of the day. The most Dave has ever paid for a Bruce ticket.
I've been there.
Yeah, I know. We all have been. All right, Dave, thank you so much. Dave will be back a little bit later on. Let's get to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey there, Carol. House Speaker Nancy Pelosi says she is encouraged by the work of the bipartisan group of lawmakers trying to reach consensus on a relief package.
Some certain things remain, and that's up to them. I don't know the inner workings, but I think they've made great progress, and I salute them for that. Of course, as always, we have to see the text, but I think the values that and the priorities that they have established are what we need to do right away.
Pelosi does not call the package a stimulus package, but a temporary relief measure. She says Congress cannot leave for the year without passing some form of aid. 24 independent experts convened by the FDA are debating the safety and efficacy of the first COVID-19 vaccine. The FDA's Dr. Doran Fink is the overseer of the vaccine review.
Today's meeting, in which the committee will advise FDA with its own independent assessment of the data, continues FDA's commitment to an expedited review process that is transparent, scientifically sound, and data-driven.
Today's all-day meeting, the group of advisors will be recommending whether or not the Pfizer vaccine should receive emergency authorization. Then the FDA will decide whether to accept the panel's recommendation. Two former Obama administration officials are being asked to serve in the new Biden administration. The Biden-Harris transition team says Dennis McDonough has been tapped to serve as Veterans Affairs Secretary. McDonough previously served as President Obama's chief of staff. And Susan Rice is being selected as the director of the White House Domestic Policy Council. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. I'm Carol Massar along with Tim Stenovic of Bloomberg Quick Take. And our most read story on the Bloomberg, no surprise, in the past 60 minutes. It's a Bloomberg exclusive. Sri Natarajan and Anders Mellon. Put those two together, man, it is a killer combination. Everything they do together, everything they do separately. It is about Gary Cohn and, of course, former chief executive, I think he was CEO, right, of Goldman.
I think.
Or president?
President.
He was president, forgive me, of Goldman Sachs. But he was refusing the clawback that Goldman was requesting for those executives who were at the bank during the time of what has been known or now become known as the 1MDB scandal. And this had to do with the Malaysian Development Bank Corporation. It was their sovereign wealth fund, basically. And so Goldman, their involvement in it. And anyway, there were a lot of controversies and problems and scandals as a result of it. And they've been trying to claw back money from any of the executives who were there at the time.
And he said, I'm not going to give you the money back, but I will donate money to charity. And that's what he's done.
Yeah.
The bank has pressed the former president to return more than $10 million. Now, he hasn't said how much he's going to donate, but we know that it's going to be going to pandemic relief and supporting social justice.
Yeah, which is interesting. But I do wonder, I mean, listen, I can only imagine the negotiations between Gary Cohn and Goldman Sachs about how they're going to do this. Clawback is, I think, a really important tool for companies to be able to do to past executives when there is a scandal that happens at the companies. We talk all the time, a company is charged with wrongdoing, they pay fines, and the company never admits wrongdoing, and none of the executives get in trouble or are fined for anything. And so this is a way for senior executives to be held accountable.
I wonder if we're going to see more of this moving forward and to set some sort of precedent that this is a way to sort of avoid giving the money back to the company, but also parting with it in a sort of amicable way.
Yeah, I don't know. I guess we shall see, but this is kind of interesting to see how Gary Cohn did it. We should remind everybody, the bank never accused Cohn of any wrongdoing in the scandal.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Airbnb surges, S&P back in the green, NASDAQ pushes higher, the Dow is lower. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mix with tech outperforming. Dow's currently down 26 points. S&Ps are higher by a point, and NASDAQ climbs by 83. The U.S. 10 yield at 0.91%. Gold falls 3. WTI crude futures up 3.1%, and transports are lower by 100 points. Among the main 11 S&P sectors, energy, tech, consumer discretionary, and financials were in the green. Industrials were under pressure, and leaders to the upside in the Dow, Chevron, Apple, and Travelers, Verizon, and UNH led to the downside. After earnings, Adobe fell 2%. And in other news, Airbnb, you mentioned earlier, opened at $146. IPO was priced at $68 a share. Southwest said they will start flying these 737 MAX no later than early April. And in deal news, Gilead bought a German biotech for $1.4 billion. Wrapping things up, Broadcom, Costco, Lululemon, and Oracle. I'll report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. We'll cover you on those earnings after the bell and to hear live breaking news over your Bloomberg. Type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close, and with us, a really cool guest that you brought to our attention. It was a story on the Bloomberg.
Eric Jackson. I've been following him on Twitter for years, and it turns out his fund is doing pretty well this year too, Carol.
He's doing really, really well. It's a long-short fund, and he is president of the Toronto-based hedge fund, EMJ Capital. They've got, I think, roughly 77 million, I think, in assets, but we'll double check with Eric. He joins us on the phone in Toronto. Eric, how are you?
Hey, Carol. Great to be with you.
Well, great to have you here with Tim and myself. Tell us a little bit about our team. Certainly highlighted some of your strategy. You've definitely been playing some of the names that have really just shot up during the pandemic.
Yeah, I definitely have a tech focus. I have, I guess I was ahead of the work from home trend before it became an acronym earlier this year, because there just were a lot of companies that I owned coming into this year that I thought of just as great companies. But like, for example, Zoom, I started hearing about over, a year ago, and certainly they got a lot of attention when they IPO'd last year. But it's funny because now we hear about Airbnb today, or Snowflake a few months ago, and people complaining about nosebleed value. Same thing about Zoom last year when it was like $90, $80, and people thought it was outrageous to consider buying Zoom at the time. But my due diligence suggested that it was going to dominate within the enterprise video conferencing space. I didn't foresee that a global pandemic was on the horizon, but once that started to roll out, obviously their TAM, their total addressable market, suddenly mushroomed into encompassing all these colleges and universities and high schools that had to immediately figure out a way to get through it.
Zoom almost $400 a share right now as we speak.
So, Eric, I'm eager to hear what you're looking at now, and then sort of how you're thinking about what you see today with Airbnb's IPO. The company's worth $100 billion now.
I love Airbnb. I don't own it, unfortunately, Tim. I got zeroed out, as they say, when I put in for my IPO allocation of Airbnb from Morgan Stanley and some of the other underwriters. There was, the biggest shops on Wall Street were the ones that are kind of first in line for that.
Would you have bought it? Would you have?
Oh, for sure.
Okay. Yeah.
Hand over fist. and we'll see what happens from here on out. I mean, sometimes these IPOs come out and then they sort of pull back, and I'll be looking opportunistically because I think they dominate the category. They've got who else is going to Verbo or is going to unseat them? No, they've got huge opportunity in front of them. They've got all this free marketing. People like us are giving them on days like today. I think they still have a long runway ahead. Don't get caught up in $100 billion market cap numbers. I mean, the opportunity is still much larger for them.
Hey, did you tap into C3.ai? I think I'm saying it correctly. Did you? Because that also not getting the attention that DoorDash and Airbnb have gotten, but as our Dave Wilson likes to remind us, it had a really great debut too on Wednesday, and it continues to just move higher and higher.
Obviously, know Tom and know a little bit about the company. Think highly of them. Not something that I have enough on my plate. I tend to run a more concentrated portfolio of sort of 11 to 20 core names. And and it's always difficult, like giving up one of your kids when you have to kind of part ways with one of the companies in my portfolio to make room for another. But that's not one that I've been looking at. The one, probably the two that I'm maybe most excited about going into 2021, who I would highlight with you. One is Zillow, the online real estate company, and then the second is Match Group, which of course controls Tinder. And for both of them, I think, even though they've been public for a long time, they don't get it's not the sizzle of these new IPOs. And some people might think, oh, they've been around, why should I own the stock now? I just think they both are category leaders with, again, like huge opportunity in front of them for years and years. And I think they will surprise people with how durable their growth is going to continue to be over the next couple of years.
And I just want to mention, Zillow's up almost 164% this year, and I believe Match is up almost 40%. So yeah, these have been on a run. I mean, how long do you stay with these names? I mean, when do you know to get out at this point? And I'm also curious, are you shorting anything right now? It's
initially when I started EMJ Capital 3 years ago, my thinking was I want to find these 11 to 20 companies on the long side that I think have a good chance of doubling or tripling in the next 2 or 3 years. So my initial thinking was like, hold these things for 2 or 3 years. You're going to get the majority of their growth within that period, and then move them out of the portfolio, look for the next generation of ones coming in. What I've found, though, and I guess to my surprise, is that sometimes these companies, especially in this kind of sweet spot of $2 to $50 billion in market cap, sometimes they can outstrip even your wildest optimistic expectations. I bought Twilio a couple of years ago at $23 in 2018 and held it to 150, and then thought, I've had a good run, time to get out. Then I saw it, power up, and now today it's at 350. Ended up, jumping back into it. So the answer, Carol, is, for some of these companies, it'll be years I'll be owning them.
Yeah. Eric, I just want to end with asking about what you do on Twitter, because you have a prolific following of more than 25,000 people. As I mentioned, that's where I first learned about you. What's your Twitter strategy, very briefly, when it comes to investing?
No strategy.
You just tweet.
In terms of
just like how you use it to find information, how you use it to find ideas.
I try. Obviously, you try to follow as many people as you can, and people with different backgrounds. People who don't just see the world through one way. Technology people, finance people, fintech people, non-business people, non-investment people too. Try to find a smattering that you like. Just constantly, listen to what's getting attention, what people are talking about. I try to listen. I try to follow my kids and what they're playing, what they're watching, what games they like for investment ideas.
Well, stay in touch, and we will certainly continue to follow you. I'd love to have you back down the road. Eric Jackson, founder and president of EMJ Capital, on the phone from Toronto. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Thursday, December 10th. Folks from Simplify Asset Management ringing that closing bell as we await the latest numbers out of Oracle, Broadcom, Lululemon, and Costco. Stocks fluctuated in the end. A down day for the S&P, down day for the Dow, but a move higher for the NASDAQ Composite Index now at 12,405, up 66 points today. NASDAQ up by just about 0.5%. S&P fell 4 points, fluctuating between gains and losses for much of the day. Fade at the close, down 0.1%. Little changed. The Dow back below 30,000, 29,998. The Dow lost 70 points today, down by just about 0.7%. Stocks fluctuated as traders assess prospects for fresh stimulus amid the most intense negotiations since Election Day. Airbnb shares more than doubled in their trading debut, propelling the home rental company to a $100 billion plus valuation, worth repeating, $100 billion plus valuation, and one of the biggest first-day rallies on record. Airbnb surged 112%, up 76 points today, 144.71. Eric Jackson is the founder and president of EMG Capital. Moments ago, right here on Bloomberg Business Week, he told us while he wasn't in on the IPO, he will be a buyer.
I'll be looking opportunistically because I think they dominate the category. They've got, who else is going to, Verbo or, is going to unseat them? No. They've got huge opportunity in front of them. They've got all this free marketing, people like us are giving them on days like today. I think they still have a long runway ahead.
Starbucks shares at a record a day after saying they plan to build more than 20,000 additional locations in the next decade. Starbucks up today by 5%. Again, recapping, turned out to be a mixed Thursday here. S&P down 4, down 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not stirred.
On Bloomberg Radio.
All right, everyone, let's do a little bit of a deeper dive into today's trade. We've definitely been IPO focused, so we're going to talk a little bit about that. Carol Master along with Tim Stanovic of Bloomberg Quick Take, and also joining us is Bloomberg News cross-asset reporter Sarah Ponzak. Big picture, 198 names in the S&P 500 higher today, 304 lower, 3 unchanged. But safe to say, Tim, it's all about these IPOs, I feel like.
That's like this theme of December, Carol, at this point, right? I mean, Airbnb today and DoorDash yesterday, certainly the freshest, but a record December is what it's shaping up to be for IPOs.
It's pretty remarkable, and getting them in before the end of the year. Sarah Ponzak, come on in on this. What are you finding interesting here?
Well, you guys just named what's most
Sorry.
interesting. You can't take your eyes off of it. Seeing an odd C3AI from yesterday, too, but unbelievable pops. You look at Airbnb today, more than doubling in its IPO debut. We have a market cap of $100 billion. For reference, during the pandemic, really at the height of it, there was a debt funding round that valued the company at close to $18 billion. So quite the change in valuation in a matter of just a couple of months, and what a day it has been for Airbnb. But that has some investors worrying about froth. However, when we look at the benchmarks today, and it's just a day, however, adding on yesterday, we see a little bit more calmness in the markets. Granted, though, that was after quite the November to remember.
Yeah, exactly. I just want to mention Oracle's crossing the Bloomberg terminal because the stock is down in the after hour. Oracle coming out with their earnings. Let me just pull up the numbers. Stock is down about 2.5%. Second quarter adjusted revenue. It's a slight beat, pretty much. What Wall Street was forecasting, $9.8 billion versus $9.79 billion was the forecast. Adjusted EPS $1.06. That's 6 cents better than what Wall Street was forecasting.
I want to get back to Airbnb because I just can't take my eyes off it. So let's just go through some of these numbers here, Sarah, because this is the story of the day. Thanks, Carol. You can keep covering the Oracle earnings while I talk about
Stock's
Airbnb.
moving, just going to say. Okay.
$68 was the IPO price. It opened at $146. It closes at $144, 113% higher than the IPO price, Sarah. When you see numbers like this, when a company like Airbnb sees numbers like this, doesn't that mean they left money on the table?
I was going to say, isn't that a failed IPO?
Exactly. Thank you.
Exactly.
I think you'd have to. I'm not sure anyone at the company would be upset with today's performance. Put it that way.
Fair.
But did the bankers price it wrong, or are investors just hungry for anything and everything?
Right. That's the question right now. The fact that we are now in this market where we are seeing absolutely massive gaps between private and public valuations. And these are for companies that have almost been, I'll say, marinating in private markets for quite some time. They have time to mature. I was speaking with an investor today who said maybe that's part of the reason, though, that these companies do have staying power. The fact that, sure, they may not be totally profitable. However, you can see a line of sight to profitability because these are more mature, usually older companies that are coming to market than, say, back in 1999 during the dot-com craze when you were seeing these IPO pops and doubling in prices all the time. However, these were very little known, very young companies. There's a difference between then and now. However, at the same time, you can certainly look at these massive gaps between pricing and then where they actually price when they start trading in public markets and say something's clearly off here.
I'm going to mention Lululemon. Forgive me, Tim.
No, that's fine. That's
Earnings coming out. Stock's up a little bit.
Allow Lulu over Oracle.
It's up about 3% here in the after hours. Also out with their earnings. Third quarter net revenue $1.1 billion versus the Wall Street forecast of $1.01 billion, and third quarter adjusted EPS $1.10, and that is 14 cents better. This is year over year. Excuse me, $1.10 versus 96 cents a year ago. Third quarter adjusted EPS of $1.16 versus an estimate of 88 cents a share, and they're not providing detailed year financial guidance, which is something that we've seen from so many different companies. Stock, though, is up 3.5% in the after hours, and it's doing pretty well here. It's up 59% this year.
Yeah, it turns out people like to wear Lululemon clothes when they're at home working.
Sarah?
I'm wearing them right now.
Yeah, there it is.
If I was home, I'd be wearing them. Sarah Ponczak, thank you so much. Great insight and another crazy day when it comes to IPOs. You're listening to Bloomberg Radio.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, what are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
All right, from crazy IPOs and Lululemon to the stock of the day we go. StoneX, Dave, what's up with that?
Well, this is a company that runs electronic markets for commodities, currencies, bonds, and stocks. They were founded in 1924. They were called International FC Stone before a name change this past July. The new name led to a new ticker, SNEX. StoneX shares have risen in 6 of the past 7 years. They've advanced as much as 33% this year, set a record just yesterday. Even so, StoneX has basically been ignored by analysts. Data compiled by Bloomberg shows Jefferies is the only securities firm covering the company. This meant Jefferies was the only firm to weigh in on StoneX's fiscal fourth quarter earnings, which came out late yesterday. The company came up short. Earnings for the quarter were 18% lower than Jefferies' estimate, even though revenue beat the firm's projection. Now, StoneX said results were hurt by an increase in bad debts among clients, especially in the energy business. Now, put it all together, the company's shares suffered their biggest loss since March. They fell almost 13%.
Dave, what do you think when you see that a stock has only one company covering it, or one brokerage covering it?
Well, I mean, you kind of have to understand where the company's coming from, I suppose, because, a lot of times if the business is relatively stable and they're not borrowing money, doing a lot of business with investment bankers, maybe there's just not a lot of incentive for analysts to cover them. But, this is a company that's been growing by deals. They bought this company called Gain Capital, which moved them into the currency markets not long ago, and that's when the name change happened, more or less. So, maybe just the analysts are missing it. You never know.
Yeah, exactly. Some of those small cap, guys, this is the kind of opportunities they look for, right?
Yeah, and there are only so many analysts.
Yeah, exactly. To cover like a massive universe when it comes to public companies. Dave Wilson, thank you so much. Bloomberg Stocks columnist Dave Wilson with his stock of the day. What a day.
Yeah, what a day.
Just the last couple of days in terms of market momentum, just interesting in terms of the new offerings, right?
Yeah, the new offerings and sort of the K-shaped recovery that we've been talking about for a long time, right? All this new money, but then so many people struggling too.
The gaps. Let's hope we get that aid package. I'm going to send you on your way. We'll see you tomorrow.
Bye-bye.
Good to have you here. Tim Stanovic of Bloomberg Quick Take. All right, let's get to world and national news. For that, it's over to Ed Baxter in San Francisco. Hey, Ed.
Hey, Carol. FDA Advisory Committee in the final stretch of its hearings on the Pfizer COVID-19 vaccine
It is expected to have its non-binding recommendation next hour. FDA Commissioner Dr. Stephen Hahn sounds pretty confident, though, of approval.
We are a regulatory gold standard for the authorization or approval of medical products, including vaccines. We intend to do, and we have done, a very thorough review to get this right, to get all the answers we possibly can from the data.
Sounds like he's gotten it right, he thinks. Now, the process then waits for the formal approval, which could take just minutes then, if you listen to that, or days. The process of distribution will then commence. And a little bit more of what to expect potentially upon receiving the inoculation. The head of the Michigan Department of Health, Dr. Joni Caldoun.
Many people will get mild symptoms after getting the vaccine, like a sore arm, a low-grade fever, or general malaise. That is something to expect, and it means that the vaccine is working.
So she says, should be mild, no big deal. UK Prime Minister Boris Johnson says it is a very strong possibility a Brexit deal will not be struck, leaving it with more of an Australian-type relationship than Canadian with the EU.
But yes, now is the time for the public and for businesses to get ready for January the 1st. Because, believe me, there's going to be change either way. There'll be change whether it's a Canada-style deal or an Australia-style deal.
Yeah, he says he stands ready to talk further with the EU, but doesn't hold out a lot of hope for a solution. In San Francisco, I'm Ed Baxter. This is Bloomberg.
It is indeed. Ed Baxter, thank you so much. And before everybody, as soon as they start to hear us talk about the story, like, this isn't a Bloomberg story. Yes, it is. It's the second most read story on the Bloomberg terminal in the past 60 hours. I'm Carol Massar, along with Charlie Pellet. It's by our Jenny Serrain. When Jenny writes and reports on something, I'm there. It has to do with MasterCard, Charlie, and they're saying, yeah, we're not going to allow our cards to be used on Pornhub.com. Apparently, after the network's review of the website uncovered unlawful content. What did they think they were going to find?
Well, I'll tell you why this is a Bloomberg story. It's all about follow the money, and that's what we do here at Bloomberg here. The interesting thing, though, is that we've got MasterCard acting today. Rival Visa suspending acceptance of its cards on the site pending completion of its own investigation. And all of this goes back to the New York Times. It had a column accusing the website of distributing videos depicting child abuse and non-consensual violence. Pornhub, in its defense, has said that any assertion that it allows material depicting child sexual abuse is untrue. But bottom line here, the people in control of the money, they are cutting ties.
Yeah, exactly. And listen, this is what, a bigger, broader story that I feel like we are talking about in 2020 has to do with companies stepping up when things are just not right. And that can, we talk about ESG. You can go in a lot of different ways with this, where companies just, even when there's, you say, follow the money, and even where there's money to be made, at some point, customers, clients of a certain brand or a certain company are going to require companies to really be above and beyond and be responsible. And I think that's just kind of a broader mission, that we're talking about a lot here, Charlie, where we are watching the environment, we're watching increased, inequities. Tim and I were talking a lot about the gaps in our society. I mean, this is where we are looking very much so to the private sector to kind of step up and do the right thing.
Indeed, and my sense is that this story is far from over for a completely different reason, and that is MasterCard says it will continue to investigate potential illegal content on other websites. You have to guess Visa's doing exactly the same thing as well.
Yeah, all right. Really looking into, where, who they're working with, basically, their network. Charlie Pellet, thank you so much. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Number of high-profile earnings reports to pass along after the bell. Let's recap. Here's what we got. We begin with Oracle. Second quarter adjusted revenue, $9.8 billion. Estimates there, $9.79 billion. Also maintaining that quarterly dividend, 24 cents a share. And the operating margin, 47 cents versus 42% a year over year. Lululemon third quarter net revenue, as we mentioned, $1.1 billion. Estimates there, $1.01 billion. Adjusted EPS, $1.16. Estimates, 88 cents. It also says it will not provide detailed full-year financial guidance. Also reporting after the bell, Costco first quarter revenue coming in at $43.21 billion. Estimates, $42.66 billion. Costco's first quarter EPS, $2.62 versus $1.90 year over year. Turned out to be a mixed day on Wall Street. We did see the Dow, the S&P both declining today. We had NASDAQ, though, advancing up 66 points, up 0.5%. Stocks did fluctuate for much of the day, ending mixed as traders assess prospects for fresh stimulus amid the most intense negotiations since Election Day. And, of course, the big IPO today, Airbnb surging 112%. DoorDash, by the way, which came out yesterday, DoorDash dropped today, moving lower by just about 1.9%. 10-year yield, 0.90%. Gold down 0.3%, $18.34 the ounce. And West Texas Intermediate crude up 3%, $46.90 a barrel on WTI. Let's repeat the equity numbers. S&P down 4, down 0.1%. The Dow down 69, lower by 0.2%. NASDAQ up 66, a gain of 0.5%. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. As Charlie mentioned, the big IPO of the day is Airbnb. He mentioned soaring 113% today, pricing at 68, closing at 144.71 a share. And this is, of course, one day after a blockbuster debut for DoorDash. Well, Airbnb CEO Brian Chesky spoke earlier today with Bloomberg's Emily Chang about the much-anticipated trading debut. In this little clip from the interview, Chesky talks about how he feels about going public after saying it felt like a torpedo hit the company due to the pandemic. Check it out.
I feel really lucky. You know, sometimes in life, you appreciate something when you can face losing it. And so if I didn't appreciate it before this year, having stared into what felt like an abyss for travel, and then to kind of rally together with thousands of people and rebuild the company from the ground up, something that I think is stronger than it ever was before the pandemic. And I feel incredibly fortunate, and I feel like thankful, not just for all of our employees, but for our community.
And of course, that was Airbnb CEO Brian Chesky speaking with our Bloomberg Emily Chang anchor on the Bloomberg TV side. So let's talk a little bit more about the company and what investors are paying up for. Joining us right now is Mandeep Singh. He is Bloomberg Intelligence Senior Industry Analyst. He covers technology for us, and he's with us on the phone in New York City. Mandeep, nice to have you here. Good to check in with you. What do you make of this debut, especially since you've been digging into the company, following the company? What is it that we're going to want to see from Airbnb going forward?
Well, I thought going into this IPO, these companies, both DoorDash and Airbnb, were priced appropriately. Airbnb around $50 billion. Well, now that it ended the first day at $100 billion market cap, I think the key question that investors should be asking themselves is, how long can Airbnb and DoorDash sustain this hyper growth phase? Because that's what they are paying up for. They are paying up for these companies gaining market share, growing above everybody else. And in my mind, I think DoorDash probably has a longer runway in terms of its growth potential, whereas Airbnb is somewhat in a saturated market. Travel is a discretionary item, and it will come back, but it's somewhat saturated in my mind. So that's how I would view the two IPOs.
Well, and what's fascinating too is you're right. I mean, Airbnb settled with a market cap of about over $86 billion. I mean, Hilton Worldwide has a market cap of $29 billion. Now, I understand too, though, Airbnb doesn't have, all of the physical assets necessarily that are under some of these, traditional hospitality chains, but nonetheless, you're right. Like you've got to think about what the growth run is for the next few years. Does this company grow into this valuation ultimately, and does it do it fairly quickly?
I mean, not only growth, we're talking about, growth in excess of 35 to 40%, because what could happen is once the growth tapers off, let's say next year it will likely grow 60 to 70% because the comps are much easier due to the pandemic. But beyond that, in 2022, 2023, once the growth tapers off and, they don't expand into new categories, the valuations will come down dramatically. And we have seen time and again with new IPOs, the period from the time they start to trade till the lockup expiration, there is a lot of volatility because investors are making up their mind about the growth potential and how much runway these companies will have.
Right. I think about, listen, we're all going to be on pins and needles. And I think I said this yesterday, that when that first earnings report comes out for both DoorDash and Airbnb, right, like we're going to just go over it. And, it's kind of a reality check ultimately for everybody.
Exactly. And I think at the end of the day, I do go back to the point about, changing behavior.
Yeah.
Every time there is a crisis, the last financial crisis is when Airbnb was born. It was started at that time. This crisis has changed behavior. I think the sentiment around gig economy, especially online food delivery, grocery delivery, has changed for the good. These services may end up becoming essential services going forward than they were, prior to the pandemic. But then the question is the runway, and we think there's the online grocery delivery, food delivery has a much longer runway. Travel, again, it's highly penetrated. People have been using, booking their stuff online, so the runway may not be as large.
Yeah, and I think there's going to be a lot of pent-up demand in general for travel, but I do think that a lot of people will also go back to some of the traditional modes in terms of places to stay. Hey, Mandeep, thank you so much. Good to hear your voice. Mandeep Singh, he's Senior Tech Industry Analyst at Bloomberg Intelligence, on the phone in New York City. Do want to mention also Broadcom coming out with their latest quarterly update. The stock is down about 2.5%. In the after hours, so we're seeing a little bit of selling. Sees first quarter revenue of about $6.6 billion versus an estimate of $6.5 billion, and also talking about some changes, different changes in the C-suite. Charlie Kawaz to become COO, Kristen Spears to become CFO. So some headlines there as well. For those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you are listening on Bloomberg 99.1 in DC, Sound On is coming up next. Coming up next, we're going to get a little bit about changes coming for the World Economic Forum, their annual event. Stick around.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Masser at Bloomberg headquarters in New York City. Coming up, we're going to talk a little bit about the World Economic Forum. We're going to hear David Rubenstein, a little snippet of his conversation with the World Economic Forum founder, Klaus Schwab. We'll get to that in just a moment. First up, though, let's get back to your top business stories. A lot of earnings, Charlie Pellet, after the close
Indeed,
here.
and not just a lot of earnings, a lot of big-name earnings that everybody knows. Let's get right to them. Oracle out with quarterly revenue in line with Wall Street estimates, reflecting fewer software licensing deals during a pandemic-fueled recession. Right now, Oracle is down 0.6%. Lululemon Athletica, that is the upscale yoga maker, posted third-quarter earnings and revenue that beat expectations as online sales boomed up by 0.3%. Broadcom reported semiconductor solutions revenue for the fourth quarter that beat the average analyst estimate. Fourth quarter semiconductor semi-solutions revenue, 4.83 billion. Estimate there, 4.78, down by 2.5%. Mixed Thursday on Wall Street. Traders were assessing prospects for fresh stimulus amid the most intense negotiations since Election Day. Today, the S&P down 4, a drop there of 0.1%. The Dow Jones Industrial Average down 69, a drop of 0.2%. NASDAQ up 66, a gain of 0.5%. 10-year up 9/32, 10-year yield 0.90%. Gold down 0.2%, 18.35 the ounce. And West Texas Intermediate crude up 3%, 46.87 a barrel on WTI. Can't ignore Brent today, closing about $50 a barrel, $50.32. First day out for Airbnb. Shares more than doubled in their trading debut. Airbnb up by 112%, 144.71. Brian Chesky is the CEO of San Francisco-based Airbnb, and he spoke with Bloomberg Television and Radio earlier on today, and he told us summertime definitely changed his company's IPO plans.
I could never have imagined us going public this year when it was April or May. And then something pretty remarkable happened. People this summer, after having been kind of locked in their homes, sheltering in place, wanted to get outside, but they didn't want to travel far. So they started getting in their cars and they started staying in Airbnb. And at that moment, it became really clear that this business model is incredibly resilient.
And again, to underscore, Airbnb up today by 112.8%. Yesterday, of course, we had the DoorDash IPO. It fell by 1.85%. FedEx hired 70,000 more workers to support both the surge in holiday packages and vaccine distribution in coming weeks, according to Richard Smith, the company's regional president of the Americas and executive VP. And United Parcel Service says it added 100,000 temporary workers to get through this peak season. UPS shares today down 2.9%, FedEx down 1.5%. Recapping, S&P down 4, a drop of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, up to date. Thank you so much. You're listening to Bloomberg Business Week, the David Rubenstein peer-to-peer preview. We're going to get to that in just a moment. Brought to you by Wells Fargo Commercial Banking, helping customers chart the way ahead in uncertain times. And David Rubenstein, you know who he is. He's one of our colleagues. He's Carlyle co-founder, and he caught up with World Economic Forum founder Klaus Schwab. They recently sat down, and in this little clip from the interview, Rubenstein asked Schwab about the future of the World Economic Forum gathering in Davos. Check it out.
So, Klaus, let me ask you, in the end of January, for the last 50 years or so, the elites of the world, the most famous business people, the most famous heads of state gather in Davos to talk about various global issues. This January, is that going to be possible?
Yes, they will come together again during the usual Davos week, but of course in a virtual form. It's so important to look at the agenda of 2021 and to shape the agenda. We are at the crossroads, but the virtual meeting is not enough. So we combine it with a meeting where people really physically will meet again later in May. Hopefully vaccines and progress in testing will allow us to do so.
How have you been able to adapt running the World Economic Forum with COVID? Are you working remotely from your home, or is it different in Switzerland than it might be in the United States where you can go into the office regularly?
No, all our staff works remotely, but we said you should come, if possible, once a week to the office, just to cultivate, let's say, the spirit of being together, of teamwork. And I myself and the top people, about 15, 20 people, we meet regularly in the office practically every day. But of course, the day has changed very much with many, many video conferences. And I have to say, we will not come back just to meet again in person, and video conferencing will disappear. We will look for a combination of the two, because video conferencing is very good to transmit knowledge, to transmit information, but physical meetings are important to create trust.
What lessons have you learned about how to deal with people or to deal with the World Economic Forum as a result of COVID?
The key lesson is that we have to cultivate resilience. I think we have to develop for our societies a higher degree of resilience, and that will be, by the way, how we do it will be one of the themes of the next annual meeting in Davos.
All right, and that was Bloomberg, of course, David Rubenstein, peer-to-peer conversations host. Let me try that again. That's Carlyle co-founder David Rubenstein, who is host of the David Rubenstein peer-to-peer conversations that you can catch the entire interview tonight at 10 p.m. Wall Street time and throughout the weekend on Bloomberg Radio. Of course, he was talking with the World Economic Forum founder and executive chairman Klaus Schwab. They obviously, like everybody else, changing, adapting, pivoting, because they are going to do that special annual meeting 2021. That's going to be in Singapore, and that's going to be held in May. So obviously adjusting what they can do and trying to find a venue where they will feel like everyone who participates can be safe. But in the meantime, they too are switching and pivoting to doing all of these big events virtually on platforms. So check out that entire interview and what you might anticipate and what's to come from the World Economic Forum, where they are looking at obviously so many of the global issues. Of course, the pandemic. They're looking at climate change, and of course they're looking at other major business and investment issues that are affecting our world and really affecting the people at large. All right, coming up, folks, we're going to talk a little bit about what we're going to see in terms of human capital trends. We're going to get that global human capital trends report from the folks over at Deloitte. They put it out every year, so we'll see what they are seeing in terms of trends that may stick going into 2021. All right, you're listening to Bloomberg Business Week. Let's get a check on world and national news. For that, it's over to Ed Baxter in San Francisco. Hi, Ed.
Hi, Carol. Yeah, all eyes and ears on the FDA advisory panel, which is reviewing the Pfizer COVID-19 vaccine. If the advice is positive, which is strongly suggested, then the FDA will make the emergency approval formal. FDA Director Dr. Stephen Hahn says approval could be just minutes or it could take days.
I have 100% confidence, and I think the American public should as well, with respect to our review of the safety and efficacy of the vaccine.
Sounds like it should be minutes. And as that approval happens, he says CDC and Warp Speed will roll out.
We've talked to them about what our process will be, and when our decision is made, we will let them know. And we would expect that, although we're not in charge of distribution at FDA, we would expect that to happen very shortly thereafter.
Yeah, so some kind of announcement expected next hour. We'll bring it to you here, of course, on Bloomberg Radio. And part of the process then will be to convince people to get inoculated. Well, Dr. Anthony Fauci says COVID has hit close to his home, his daughter's and boyfriend's brother.
So there you have a 32-year-old young man, otherwise healthy, actually, quite athletic and strong, who died. Very sad. It was very much made of really saddened my daughter.
He says he's sharing it to motivate people to get vaccinated when it becomes possible. And New York is nearing its worst case on record. Said April 15th, 10,600 cases reported yesterday and growing. UK Prime Minister Boris Johnson says it should start seriously planning for a hard Brexit. He says the talks are not close.
Strong possibility that we will have a a solution that's much more like an Australian relationship with the EU than a Canadian relationship with the EU. That doesn't mean it's a bad thing.
He says he's willing to talk, but doesn't think it'll do any good. This is Bloomberg.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio. Carol Massar, joining me once again is our own Charlie Pellet. And holiday Christmas parties, I've got to say, we had a former colleague. She's friends. We're still friends with her, Julie Hyman. Man, she used to organize, I guess, an official, unofficial Christmas party that we used to do on our own. It was a lot of fun.
It was a lot of fun, and I'm so glad that we're talking about this story. It's a Dow Jones story. Office party is still on, and more awkward than ever. First of all, office Christmas parties, I've never found them to be awkward. I like people. I love parties. I'm either a great guest or a terrible guest, depending on your perspective. If you begin at 7, I'm there at 6:59:59. If it goes to 11, I'm right at there till 10:59:59. But that said, online Christmas parties, a Zoom,
not the same.
I'm not doing, listen, I went to a bar mitzvah online. It's not the same. It's just a horrible, awkward experience for everyone involved.
There's an event specialist in this story by the Wall Street Journal said, I'd rather braid grass. Everybody's super fatigued. Everybody's pretty burnt out from being online. In other words, I don't really want to go to an online Christmas party. Thank you very much. I appreciate the sentiment, but it's just not the same. But people, companies, folks are trying to kind of rack their brains for ways to remotely celebrate the season, and they're trying to kind of figure out, how do we do it?
Exactly. And I sit there like a lump of coal on these calls here because, it's tough to get a word in edgewise when you're looking at a Brady Bunch style screen, except with an office Christmas party, you can only imagine how many people there are on a Zoom call.
Well, and people are saying, wait, is this just another thing I have to do? And if you're going to get creative and now I have to maybe let's do a virtual ugly Christmas sweater contest, it's just another thing I have to think about, and I'm kind of exhausted.
Yeah, don't invite me. Save it for next year. We'll do 2 nights next year to make up for it.
Wow. And Charlie, he's the guy who wants
I
to
like parties, though. I love parties. Don't get me wrong. Just not online parties.
Exactly. But it is interesting. The story it's a pretty funny right through of just people, what they're trying to think about what to do. And I think one survey by Challenger Gray and Christmas, only 23% of companies say they were planning a holiday party this year. Go figure.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, keeping an eye on Oracle shares after hours. They are trading lower, down by about 1%. It did report quarterly revenue that was in line with street estimates, reflecting fewer software licensing deals during a pandemic-fueled recession. Mixed day on Wall Street. NASDAQ push higher, no record, but up 0.5% at 12,405, up 66 points. S&P had a losing day, fading right into the close there at 3668, down 4 points, a drop for NASDAQ of 0.1%. The Dow down 69, a drop there of 0.2%. Stocks mixed as traders assess prospects for fresh stimulus amid the most intense negotiations since Election Day. S&P did post back-to-back losses. Today we saw gold falling 0.2%, 18.36 the ounce, down 3.23, and West Texas Intermediate crude up 3%, 46.91, Brent 50.36. Of course, today's big story, the IPO of Airbnb surging 113% first day out at $144.71. The IPO price $68. Again, recapping mixed day, S&P down 4, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. I'm Carol Masser at Bloomberg headquarters in New York City. And many questions about what working looks like for employees in 2021. We've had a lot of discussions here, certainly at Bloomberg. What trends stay with us post the pandemic? Tracking that as they do every year is the global consulting company Deloitte. Back with what their annual survey on global human capital shows us is Erica Volini, global human capital leader at Deloitte Consulting, on the phone in Phoenix, Arizona. Hey, Erica, nice to have you here. Amazing that we are getting ready to wrap up another year, but it's a year like no other. I can only imagine some of the discussions that you guys have been having specifically there at Deloitte and what has shown up in this survey. Talk to me a little bit about some of the highlights.
Carol, great to be back, and I agree. Yeah. This has been an incredible year. I think many of us are happy to see it end. The survey, we surveyed over 6,000 respondents around the world. We had over 3,600 business executives, and what they told us was a few things. Only 15% of them said they were actually prepared for the pandemic, which maybe is not that surprising. But what was surprising is that when we asked, what is the number one thing that you need to focus on to be prepared for unknown futures moving forward, they identified the ability of their workers to adapt, to reskill, and to assume new roles. And that's against choices like access to financial capital, access to technology investments. They anchored on what we consider the human aspect at work, what they need for their workers to be able to be prepared for the future.
So what happened? Was it just, Erica, that we all realized that when everything shut down and we all had to work differently, that unless your workers were equipped with the skills, the technology, whatever they needed, your business shut down?
Exactly. We have seen during the pandemic, one of the things I think we've seen is human potential in spades. We've seen people in seconds adapt to remote and virtual working. We've seen them take on new roles, new skills, new jobs, work in new industries. And I think it's reminded us all that it's worker potential and human potential that actually is one of the biggest assets that executives have to really leverage as they try to move forward coming out of the pandemic.
Are there any companies that really stand out? I mean, we've been talking to a lot of CEOs at different companies, and some of the strategies, techniques, technology, how they kind of made sure their workers were taken care of, had what they needed, and also just to make sure that, you're checking in on your employees in a good way. Absolutely. And like just to make sure that they're okay. I don't mean necessarily spying, but also making sure that they're getting the jobs done.
We had a great interview with Ed Bastian, CEO of Delta Airlines, and he talked about just that, how they were caring for their workers. They did some extraordinary things, including giving leave to over 5,000 workers that were older and that were at risk, investing heavily in rapid testing capabilities, and helping their workers pivot. He talked about how some of their folks who worked on the airlines had skills that were transferable to healthcare, and they helped them to do that and to pivot. And I think it's those types of actions from organizations and CEOs that are so important, because they demonstrate not just a responsibility to the workers, but a broader responsibility to the communities and society overall. And I think that's a big focus that we're going to see from CEOs moving forward.
Well, and I do wonder, what we're learning, Erica, just watching, as I keep kidding, the sausage being made, the sausage being the COVID-19 vaccines specifically. I mean, there's been so much transparency, but this whole idea of collaboration, a global effort, like it's a kind of reminder that when communities, countries, the world work together on a problem, you can really do something significant in a much shorter duration.
Yeah, and talking about vaccine development, we had a phenomenal discussion with AstraZeneca, and as they were developing their vaccine, what they talked about is how they composed teams, and they took a very non-traditional approach. When they put together their teams, they not only looked at individuals who had expertise in drug development, but they brought in individuals who just had a passion, what they called a passion and an excitement and energy for this effort, and they believed that and including pulling in individuals from outside their organization, from the broader ecosystem into their team, is what helped them with the speed of getting that drug out and developed. And they think that's the way forward for work. And those are some of the changes that we expect to see as work fundamentally gets transformed, reimagined, and what we call re-architected moving forward.
Well, push that a little further. Fundamentally, work getting transformed, meaning what specifically? Because, we've obviously had the debate and a lot of discussions around working from home, hybrid, and I get lots of different opinions on them. How does work transform really significantly? That's a lasting change.
Yeah, a lasting change. Well, let's start with the most obvious, which is just what you just talked about, which is remote virtual work. We believe that most organizations are going to end up in some type of hybrid model. There was a discussion on LinkedIn today about whether we're going to move to a 3-2-2 model instead of a 5-day work week, and in the office. And I think that we have learned that virtual remote work can work, but beyond that, and I think that's what's important, I think we're going to see the breakdown of organizational hierarchies, and we're going to start to see many more organizations start to organize work in teams that cross organizational lines. I think we're going to see a lot of organizations change the way work is designed to reflect well-being. They're going to look at how they're scheduling their work, how they're putting teams together, how they're giving people breaks in their day, setting policies on when people need to be on Zoom to move past this always-on culture. And these are real changes to how work is getting done that I think we can expect to see take hold as we enter into 2021.
What was the biggest surprise in kind of talking to companies, pulling together your annual report this year?
Biggest surprise was, I'll put in two things. One, how many business executives responded. We've been running our Deloitte Global Human Capital Trends Report for 11 years. This is the first year we had more business respondents than HR respondents, including 233 CEOs and 1,200 board and C-suite leaders. That shocked me, especially in the context of a pandemic. Number two is that executives told us that 61% said they're now focused on work reimagination. That number was 29% pre-pandemic. So we saw a doubling of executives saying, not only do we need to focus on work, but we need to reimagine work. We need to take a step back and fundamentally think about how work's going to be done differently. That, to me, is a huge shift.
Yeah, I have to say that one of the things that I think have always stood out with me, I think about Meg Whitman, formerly of HP, formerly of eBay, who said, I've been working in the office for 40 years, and now I'm pretty much just working from home and getting as much stuff done. It's just interesting the amount of CEOs who said I can do 6 meetings with top leaders in a morning versus I could do 1, before, and I had to fly to see them. That has been a significant change in their thinking and how it applies to workers.
And that's the whole point.
Yeah.
I mean, I view this as a moment of worker empowerment. As we've learned that all the rules, the orthodoxies, the procedures that we thought were necessary aren't necessary. That's what we learned during the crisis. We can work without them. All of a sudden, in a world where rules are broken, it's an opportunity for workers to take advantage of that. And I think that's the most exciting thing.
Well, really cool stuff, and looking forward to seeing how it all plays out in 2021. Erica, thank you so much. Happy holidays. Have a safe holiday as well. Erica Volini, Global Human Capital Leader at Deloitte Consulting. She is joining us on this Thursday on the phone in Phoenix, Arizona. All right, coming up, we're going to get really a great deep dive with the CEO of BNP Paribas, Jean-Yves Filion. He will join us to talk about where we are and where we're going.